Portcullis House, the Thatcher. The Thatcher Room.
Morning, Dr. Carney. Thank you very much for coming in to give evidence this morning on what I think might turn out to be an important hearing. We're also very grateful to you for the very detailed response you gave to our full questionnaire, which we're publishing at the same time as this hearing. What we'll do is divide this session into two areas: the first monetary and the second fiscal policy. We'll take and the second financial policy, and we'll take a short break between the two. But before we get on to that, I think there are a number of questions that it might be worth asking about the process of your appointment. Can I begin by asking you why you changed your mind about this job? You originally said no, I think, in August 2012, and then you completely changed your mind. Why and what changed your mind?
Thank you very much, Chairman, and thank you to the members for having me here today. And may I also thank you for the quite wide-ranging and thought-provoking set of questions that you did send. I think it's a good way to start off this crucial dialogue. In terms of the question, in terms of my decision process, there were a series of conversations over the course of last year that I had with the with the permanent secretary and with the chancellor related to this position. My view in the summer of last year and right up to and including the deadline, the October 8th, I believe, deadline for an application, was that was not to proceed with an application for a few reasons. One was my current responsibilities at the time as Governor of the Bank of Canada, and secondly was the personal aspects of the job, or the personal aspects that would be associated with the move. I have a young family, and the transition of countries and schools here and then back was, in the end, decisive. It was a finely balanced decision, given, and I think I outlined in my written response, given the immense challenges that are associated with this.
These are explaining why you didn't apply. My question really is why you decided to reapply.
Yes. Well, what changed was that subsequent to that decision, the Chancellor suggested to me that the position could be for a period of 5 years. That was the first point. And secondly, I was informed that Charlie Bean, Deputy Governor for Monetary Policy, had agreed that he would extend his term for an additional year from the time of the selection of the new governor. And so the first aspect, I can appreciate for some, given that it's a personal decision, it may not seem so decisive, but actually for me, given the timeline of given the ages of my children, it actually makes a material difference to come here and then return to Canada. I'll be more specific. My eldest daughter will just finish high school over the course of 5 years, and then the second oldest daughter will have 2 years in which to reintegrate into a French school system and the Canadian school system, which is what she would do.
Okay, so it's your daughters who were decisive in this decision. When did
yes, I didn't take their counsel.
When did this? Anyway, it's a novelty at least. When did the Chancellor have this conversation with you, offering you 5 years rather than 8? It was,
I can remember distinctly, it was at the Mexico G20, which was, I believe, the night before the American election, so the start of November 4th or 5th.
Did it occur to you that the application deadline had closed about a month earlier?
No, I was fully aware of that.
So how did you respond?
I was...
Didn't you say, well, hasn't the application deadline closed? Isn't that the first thing one might ask somebody approaching you to apply for a job?
Yes. I needed to speak to the permanent secretary based on the conversation that I had with the Chancellor of this possibility, since the permanent secretary was in charge of the process, the committee for selecting the next governor. And he had devised a process for sitting governors, which allowed a sitting governor to apply and be interviewed in short order.
When did you first hear about that?
I heard about that in October, prior to the conversation with the Chancellor. Prior to the conversation with the Chancellor.
How long prior, roughly?
Roughly 3 weeks or so.
Okay, around the time of the closure of the deadline. And that was
after the closure of the deadline.
And that was in a conversation, telephone conversation?
It was in a telephone conversation, yes.
Okay. And then you came to interview, and that interview, according to Bloomberg, took place on the 17th of November?
It was thereabouts. It was a Sunday.
Okay.
So if that is the Sunday, yes.
And did it occur to you that some of the other candidates, one of whom is still in the bank, might be a bit put out by the fact that a special arrangement had been put in place for you?
I think it's what occurred to me was that anyone who had made the effort and had the desire to serve in this important role would be disappointed not to succeed. But what appeared clear to me and as it does now is that the process that was followed, in other words, the specific interview, and obviously I only went to my interview, but my understanding of the questions that I needed to answer, both by the committee and then by the Chancellor, were exactly the same as were put to the other finalist candidates.
Okay. Teresa Pierce.
Good morning. No doubt you're aware that mortgages are quite hard to come by in the UK for many people, including my constituents. Is that why you need an extra $250,000 a year as housing allowance?
The offer of the housing allowance, which I accepted, is consistent with many arrangements for international executives who move for a period to this country or to other countries, and in order to equalize, in broad terms, their living standard from where they're coming to where they arrive. So unfortunately, in this regard, I'm moving from one of the least expensive capital cities in the world, Ottawa, to one of the more expensive, shall we say, capital cities in the world, London.
Would you have done the job for less?
I was offered these terms and I accepted them.
Given that Bank of England staff have had a pay freeze for the last 2 years, do you see there might be any resentment amongst staff at the level of your package given their pay freeze?
I'm not aware of any.
So you don't anticipate that in any way? I
don't anticipate that, if I may say, in terms of the pay package is, if I may, properly viewed as pay and pension, and pay and pension relative to pay and pension that is currently in place for current governors and deputy governors. Now, since there is no pension associated with my package, I am advised by court that the package is equivalent to the package of the current governor. The difference is the housing allowance, as you pointed out at the start.
Okay, but given the level of pay package that you're getting compared to the previous governor, and given the pay freeze for staff, do you have any concerns about recruiting and retaining quality staff going forward in the bank? The
recruiting and retaining quality staff is always going to be a priority for a knowledge-based institution such as the Bank of England. In my experience, what one starts with is an enthusiasm for public policy and a demonstrated interest and skill in public policy to recruit people into central banks. There is a differential between my pay as governor of the Bank of Canada and the staff in the Bank of Canada, and we've been very successful in recruiting from a broad range of outside areas, including quite broadly in the private sector.
Thank you.
Just on that last point, your current pay in sterling terms is around, total remuneration is around £250,000, isn't that right?
Yep. Yes.
And your total remuneration is going to be in excess of £800,000 in your new job, correct?
Yes.
That's a rather large rise, bearing in mind that there's a pay freeze on at the bank. I think that's the only point that seems relevant here.
Yeah, well, I'll just reiterate that my pay and pension, my pension's zero, but my pay and pension is equivalent to the pay and pension of the current governor. Court has offered that. Secondly, the housing allowance relates to the fact that I'm moving, as I said, from one of the cheapest capitals to one of the most expensive capitals. It's a common, relatively common arrangement for senior executives. It was offered to me. I accepted. I would add further, if I may, that the combination of the two is broadly equivalent to the pay and pension of the outgoing CEO of the FSA, Hector Sands.
Andrew Lipson.
Thank you, Chairman.
Thank you.
Dr. Carney. Can I just put my hand up and say I think you'll be earning it? So I don't. I suspect you'll definitely pay the price. But you've said that you are only going to do the job for 5 years and that there are certain things you want to achieve during that period of time. If you haven't achieved those goals, would you consider staying on, or is 2018 the absolute deadline?
I think there's value in clarity about the term, particularly given some of the quite considerable internal transformations that are necessary within the institution, giving full life. And I'm sure we will have an opportunity to discuss this, to some of the governance reforms that have been put in place, putting in place an effective talent management strategy, succession plan, grooming successors, potential successors, and having an arc of reform and restructuring of the institution that is consistent with a finite timeline. So I hesitate to take that finite timeline away at the outset. But I can assure you my full intention is to accomplish what I'm being asked to set out to do. And I'll do everything I can to do that.
Okay. You've also... Yes. Have you been surprised by the amount of media attention you've had on your appointment? And in particular about the accusations that you have political ambitions? And is there anything you want to say about friends amongst the political class that you might like to mention now rather than have them dragged out under the spotlight later on?
Have I been surprised? I've been surprised that it would be viewed as politically astute, and I'm in front of a range of people who are politically astute, demonstrably successful. I'm surprised that it would be suggested that taking one of the most challenging jobs in central banking in another country would be viewed as politically advantageous in my home country. So I think if I had political ambitions, I would have pursued them in Canada. And so I think this is revealed preference. I do not have political ambitions.
You were reported as having expressed concern about income inequality in Canada. First of all, can I ask if that is the case? And more importantly, what do you see as the economic problems with wide income inequality in any country?
Thank you for the question. The report, I think, relates to comments I made regarding the Occupy movement, which in the U.S. And then by extension into Canada. And if I made I won't give you the full context, but I made a distinction between the level of inequality and the change in the level of inequality in Canada versus what has happened over the course of the last decade in the United States. And I further, to ground this in monetary policy and my core responsibilities as Governor of the Bank of Canada, made the point that one of the challenges in that environment, so an environment that starts with increased inequality and marked increased inequality, that is the case in the United States, is the danger of persistent unemployment and so-called hysteretic effects, if I can use the jargon, but the gradual loss of skills because of prolonged unemployment, which has more severe consequences, obviously for the individual, but also for the productive capacity of the economy. And that is one of the challenges that has been faced by the Federal Reserve, and one of the reasons for which they have been as appropriately aggressive in their conduct of monetary policy.
That's quite a helpful answer. So, prolonged unemployment, loss of skills, issues relation to productivity, does that drive in any way policy in your mind, in terms of central bank policy?
It is a consideration. It has to be a consideration in circumstances where there is persistent slack in the labor market. Judgment has to be made by the central bank, the extent to which that is caused by demand deficiency, and obviously the extent to which various monetary policy actions and which ones can address that demand deficiency. Because there is an issue in terms, if I may suggest, there is an issue in terms of the speed with which the labor market returns to a more natural equilibrium, because the slower it does, the higher the, to use the terms again, the higher the natural rate of unemployment can become because of the atrophy of skills and the loss of workplace attachment.
Well, we're going to be talking more about the monetary and policy side later, but just one final little question on the, you mentioned the Occupy movement and the sympathy that you appear to have expressed for it in the context which you've given. How much of that do you think reflected a wider public anger at the behaviour of banks more generally?
I think clearly that was a catalyst, and obviously the movement itself, the physical location of its start was on Wall Street, and the particularly it was not just the fact that the financial crisis triggered a very sharp recession, obviously here as well as in the United States, but that the senior-most officials in those financial institutions appeared to escape unscathed, not pay the price, and in fact, in many of the institutions that failed, some of the CEOs received large payouts prior to their demise.
Thank you. You've produced some fascinating written evidence. One thing that comes through strongly is a distinctive, or an attempt to describe a distinctive management style. You talk on a number of occasions about consensus. Are you using that word to contrast the style you intend to bring with that of the incumbent?
Well, I'm not really in a position, not having worked in the institution, to comment on the management style.
You picked up a few things, I'm sure, from
I have
press
worked
reports, and you've met
I have worked
senior colleagues with whom you'll be working.
Well, I may say that in terms of the management style of Governor King, my direct experience of that has been in committees such as Governors and Heads of Supervision, which is a committee of the Basel Committee, which he chairs, the Global Economy meeting, which he also chairs. And I have found his style in those committees of experts, so to speak, to be consensual, if I may use that term, to seek consensus, to pick up argument, and to broaden it out. But I would say, in terms of my personal experience, the Bank of Canada operates absolutely on the basis of consensus. Now, I recognize, as does the Financial Stability Board, and I think in some respects the Financial Stability Board might be a better analog to the committees of the Bank of England, because, and I'll explain that, in the Bank of Canada we operate under consensus, but in the law the responsibility for monetary policy is grounded in the governor. So there is a clear, the power ultimately is grounded in the governor. Now, we built up the tradition over governors of consensus, and I've done, I think, everything I can to ensure that that's been reinforced while I've been governor. But within the Financial Stability Board, which is obviously, it is a collection of governors, treasuries, standard setters, supervisors of sovereign states and jurisdictions. The European Union is represented as well. That you have to get true consensus, and a derogation from the consensus on as important a reform as resolution strategies or a variety of things related to OTC derivatives stops that reform in its tracks. And I think, well, I've followed the focus of this committee. I know the focus you put on reform, and this is the moment to push things forward. But in order to do so, it requires a chair that works with the members of the committee to help to drive to consensus. Last thing, if I may, and I'll turn back, is that I fully recognize that with the voting structure of the MPC, of the FPC, the individual accountability of the MPC, of the FPC, and the workings of the PRA board, that it will not always be possible to have consensus, and that is fine. And I fully recognize, and I also recognize that as governor, I will from time to time likely be in the minority, and that is also fine. What I would view my job to be is to ensure that all views are heard, all arguments and all analysis are appropriately followed up upon, and then the decision is made by the individuals.
Well, quite understandably, you've avoided directly answering question I asked you, which was to compare your style with with the incumbent. But you are signalling something in this document, aren't you? That in your replies to the questionnaire, there are a dozen references to consensus, and you don't just refer to it in an idle way. You talk about developing a team culture. You talk about developing consensus-based decision-making. You talk about forging consensus in a number of specific areas, whereby a clear implication there is a weak consensus or none at the moment in decision-making structure. So there's something going on here, isn't there? This is a change of approach that we're meant to notice you're signalling.
It's an approach that I think what I would signal or underscore is it's an approach I think is essential for the institution to be successful. I'll add one other point, which is that particularly if we look at the decisions of the FPC and compare them to the MPC, when there are a range of decisions, when there are decisions necessary around a range of possible instruments and working to an objective that is not easily summarized as one indicator. So in other words, MPC ultimately working towards price stability as measured by CPI. FPC working towards financial stability that can only be represented by a wide range of indicators, wide range of tools. And there it's important, particularly important, to send a clear message as much as possible, which requires true consensus decision making.
Well, we're going to come on to governance questions in the bank, which are extremely lively as an issue of debate in Britain at the moment. But before I do that, David Ruffley.
Dr. Carney, welcome. I think it's worth pointing out that on your question of pay, you will be paid considerably less than recent England football managers. And I think you are more likely to have more success than them. We're going to get onto the policy issues in a minute, but you say in your written evidence to us that one of the key criteria to measure your success will be the effective communication of monetary policy and fiscal policy. And I quote, "That is well understood by the public." You also say, "Public understanding of macroprudential policy is presently low." I'm sure you're right in saying that. And that, I quote, "the significance of, for example, capital ratios and liquidity requirements are not widely understood by the public." What's a capital ratio?
Capital ratio is it is a ratio of the equity of an institution relative to the assets. So the loss absorbing equity relative to the assets of the institution.
How would you describe unwinding QE?
Unwinding QE is to return the balance sheet of the Bank of England to its historic level.
What's the liquidity requirement?
The liquidity requirement is the need for a bank to have funds to meet short-term obligations.
I think that's all I have on that one.
Well, I think you scored pretty well there. Overall, well, Jesse Norman.
Thank you, Mr. Chairman. Dr. Carney, you'll be inheriting a position in an institution which has gigantic power across the economy and growing power, given the new responsibilities of the financial sector. It is formally independent of government. It is subject to low levels of accountability externally and has had a court that has not been very effective in ensuring high levels of accountability internally. Do you think it's appropriate for that job to be referred to as that of the Sun King?
Not as it's structured under the new Financial Services Act, no.
Why not?
Well, because there are various mechanisms of accountability that are in place. First, the structure of the actual committees, the voting structure of the committees, both the MPC, the FPC, the structure of the PRA board, the clear remits that have been given to those committees by Parliament through the Act, the Oversight Committee, the newly formed Oversight Committee, of the independent directors of the bank, and extremely importantly, this committee, which is the way through which not just the governor, but the deputies and the senior officials of the bank and the external members of the policy committees are accountable to this committee, through this committee to Parliament, and through Parliament to the British people.
I mean, your conception of leadership clearly is one that requires the leader to be able to exercise, where necessary, a detailed grasp
Yes.
of aspects of the institution and aspects of policy. Given the spread of responsibilities and the number of committees that you're going to be on as governor, how can you possibly exercise any detailed grasp across that entire spectrum of activity?
Well, in many respects there are synergies, and that's part of the spirit of, as I understand it, of this very important reform. At present, as Governor of the Bank of Canada, I have responsibility for monetary policy, very clearly defined responsibility there. We then have a contributory responsibility for financial stability, which means we oversee the payment system and we analyze potential risks to financial stability, but the levers on financial stability are controlled by others. We also, by dint of our role in the Financial Stability Board, participate in the development of a series of global financial reforms, many of which are applied domestically within Canada. But we don't exercise or see through those financial reforms. So we have an opinion, for example, in the Bank of Canada about bail-in and how bail-in debt plays into resolution strategies for institutions and ending too big to fail. But all those decisions are taken by our Treasury or taken by our deposit insurer or taken by other entities within Canada, within the Bank of England. So these are all issues on which I, as governor in Canada, need to be expert enough to contribute to decisions, but I don't see those decisions all the way through. And if one doesn't see decisions all the way through, if one's not ultimately responsible for their implementation, that limits, in my experience, that limits one's level of expertise.
So you won't actually be responsible for some aspects of these policies or committee work?
I'm sorry, the analogy I was drawing is that in Canada, I'm not. In the Bank of England, the institution is for all of the aspects that I just referenced, and that, in my opinion, that reinforces the ability to be up to speed. Let me make another point, if I may.
So that reinforces the requirement on you to be on top of the detail?
It reinforces the requirement on me to be on top of the detail, and the point I was trying to make, perhaps I was taking too long to make it, is it makes it easier for me to be on top of the detail as well, because the institution itself sees through to the detail of those aspects of policy.
That's how you read the bank now? You think the Bank of England does that now? That
is how the bank is becoming because of the reform to the bank, the addition of the FPC and the addition of the PRA.
Have you thought broadly about how much time you're planning to allocate to each of these areas of your responsibility?
Well, I think that given, and I would say in this juncture in the British economy and financial system, there are quite strong overlaps between the various responsibilities, and so, and I'll give an example. The work that the FPC has done in conjunction with effectively the PRA, I know the PRA is about to come, but effectively the PRA through the FSA on funding for lending and the coordinated approach that's been put in place on funding for lending. That is macroprudential policy, but it's also monetary policy at the same time. And so how one allocates one time between the two of those, one can debate. But I think at this point and for a number of years, particularly since this is one of the things that makes the job so challenging but also so interesting, that for a number of years there will be quite strong overlap between putting in place the judgment-based supervisory approach of the PRA, putting in place macroprudential tools, and the monetary policy response that's necessary, and the collective of these policies in order to grow the economy in a sustainable way.
So banking supervision will essentially run along, will have to take second place to that, will it?
Banking supervision? I don't think so. I'm sorry if I left that impression. I would almost see that this is a tiered. If you're pushing me in, that's fair. A third between the three responsibilities, for a couple of reasons. One, on banking and insurance supervision. Importantly, there's a new approach. A very capable team, but there's a new approach that's being put in place. It needs to be put in place. I think, as members know, one of the core challenges in the financial system and therefore in the economy right now is that the core of the banking system is not as strong as it needs to be. It's a matter of some debate.
No kidding.
Yeah. A matter of some debate, and that those judgments can only properly be informed by on-the-ground supervision. Ultimately, so there are some macro-prudential judgments that need to be made around that, but it needs to draw on the supervisory expertise. And again, that, I think, is an advantage of the new structure because the supervisory expertise is sitting right next to the macro-prudential.
So, final question. So then, in point of your command of the detail and of the fact that you uniquely will be sitting across all of these committees, there will be very, in your view, evident responsibility at the top for failures within that regime?
Depends what you mean. Yeah, first point. We, as I'm sure you're aware, it is not an intention to run a zero failure regime by means zero failure for institutions. In fact, the thrust of many of the reforms is to ensure that institutions can fail safely, that effectively the market can work, and that will ultimately they'll provide more competition. That will ultimately provide a stronger system. So it's, as you know, it's not a zero failure, but certainly the responsibility of the governor and of the deputy governors, the relevant deputy governors, is to successfully execute.
You'll be running a zero failure regime within the bank.
The bank will make mistakes. The bank will make mistakes, but there will be, all institutions make mistakes.
What's your tolerable level of failure within the bank, Dr. Carney?
I'm not grasping exactly how you define it.
Do you like low levels of failure or medium levels of failure?
I prefer low levels
Possibly
than medium
high.
levels, yes.
Thank you very much.
Yeah. That's what most people like. You just referred to insurance there. Of course, insurance has gone to the Bank of England. They don't know much about it. They're busy gathering together the expertise in order to do the job. Do you know much about insurance regulation?
I know a reasonable amount about insurance regulation. We have a relatively large, particularly life insurance industry in Canada. I sit on what is a interagency micro-prudential committee, statutory committee. In fact, I was well, it doesn't matter. I was there.
So you're already covering this area in Canada,
but I don't have the entity that the Bank of Canada is not the primary entity responsible for insurance regulation. So I wouldn't over-represent. That said, I have that experience through that committee. We have a large life sector in Canada. Secondly, at the Financial Stability Board, if I may, we are in the process of identifying globally systemic insurance companies and the regulatory response to those institutions. And that, if I may suggest, is highly relevant to at least the larger insurance. And I certainly recognize that this is the third largest insurance industry in the world.
And insurance played a major role in this crisis. So your position is basically, you know a bit about it, but you've got to get up to speed like the Bank of England has.
I will be much more expert. Yes, next time we talk.
Okay.
If may I, Chairman, non-traditional, non-insurance activities of insurance conglomerates played a major role in the crisis. If I just can make that distinction, as opposed to
yeah, that's an important distinction. John Thursday.
Good morning, Dr. Carney. Can I come back to your leadership style and qualities? Now, in your very helpful answers to questions, you divide the challenges between part of them as institutional challenges, and the first thing you say there needs to be a clear shared vision for the bank that needs to be established. Now, a classic definition of a CEO in leadership is having a vision, communicating it, and resourcing it. What is the current vision of the Bank of Canada?
The current vision of the Bank of Canada is that we provide price stability and financial stability to enhance the economic and financial well-being of Canadians. So it's rooted in, if I may, it's rooted in our legislation.
Clearly, your answer indicates that, because you say a clear shared vision for the bank needs to be established. There's an assumption that there isn't one in the Bank of England.
If I may, given that the institution is being given considerable extra responsibilities as of the start of April, that creates the opportunity.
So it's a new shared vision.
It creates a need either to reconfirm or adjust the vision for the institution. Sorry, I don't want to eat up your time. I could persist. The point I would make is, and let me make the point on the potential, which is that I think there are analogs to what the vision is in the Bank of Canada. This is and the two objectives of the Bank of England have been price and financial stability, contributing to price and financial stability. I think it's important that it's recognized that those are cornerstones or building blocks of British prosperity. In other words, they don't guarantee prosperity, but without either, or both rather, that will not come. But the important thing is, with a vision, is that it's developed jointly with senior management. It's adjusted, and there is buy-in, and then it's broadly recognized by all members of staff. And I'll give one example. It goes back to Mr. Norman's question, which is that failures, to use your term, whether it's failures of operational failures, individual failures in terms of expenses or personal conduct, issues around counterfeiting of notes. There are a variety of issues. All those issues, all those failures, to use that term, detract from confidence in the institution, confidence in the system, detract from financial stability, and could, in the extreme, detract from price stability. So there needs to be, and I believe there is, but it needs to be continually reinforced throughout the institution that everybody in the institution is responsible for the success of the institution, because everything that happens in the institution is watched closely and ascribed to the broader whole of the British financial system.
All good points, but a vision is a very simple, clear statement of what the whole institution is about. How will you go about achieving that vision, and at what point will we as a committee be able to say to you, what's the vision of the Bank of England, and you would give us an answer?
That is first 6 month work, without question, and I would hope before the end of that 6 months.
My second point, following on very much from Jesse Norman's questions, it's been said that the Governor of the Bank of England from April will be the most powerful central banker on the planet. There are all of these committees which he will chair, as well as being the chief executive and a major player on the international stage. There is the possibility, looking at all of that, for the way in which it is run to go in one of two ways. It can either be the sort of emperor, or it can be the constitutional monarch. Have you got an idea of which you might favour?
You're going to back me into Sun King with the second option. No one individual could. I think I'd like to link the two questions, because I think it's absolutely essential in this role to have a grasp of the detail, to understand the core of the issues that each of the three policy committees are engaged with, and also to make the connection between those policy committees in order to get the full benefit of the institution. But that said, so that is essential, but that said, no individual is going to have the expertise of of the collective of those committees. That's why the externals are selected, and that's why we develop internally at the institution. So it cannot be an emperor. That cannot be the approach. It's not possible, even if one wanted to, but it also would be fundamentally limiting for the institution and an unsuccessful strategy. Now, I'm not sure that then goes to your other option, but my view would be, more of a managing partner, if you will, within a partnership.
Let's not worry about fancy terms. I mean, the critical point is when it comes to corporate governance, and this committee has been very critical of the past arrangements of the Bank of England, is that the manner in which you develop the style of leadership will dictate how best to achieve the corporate governance of the position. In that good corporate governance is both a support to the positions, the key positions, but also a check and balance on. Coming in, looking at it at the moment as an outsider, is that corporate governance fit for purpose, to coin the Hackney phrase? Are there things that you would like to see put in place, either to help support or to help as a check and balance of the role that you are wishing to create?
Well, I think the answer, on the outside looking in, I think the answer is yes. But it depends on a couple of things.
Is that yes, you'd like to do things, or yes, it's okay?
Yes, I think it's fit for purpose.
Right.
But it needs to be given life, I think is the way. In other words, we need to ensure, and obviously this is entirely out of my control, except from the perspective of cooperation, but we need to ensure, for example, that the Oversight Committee of court is active.
Do you favour the Oversight Committee doing the reviews that this committee has suggested?
I certainly favour the process of the Oversight Committee identifying a series of issues which it wants to review. I think as well, I welcome the fact that it's recognised that management may also want to initiate reviews as well from time to time. And I think that, if I may say as a general point, which I believe I made in my written submission, which is that there have been a series of useful external reviews performed. The bank is in the process of determining its response to those reviews. One of the first things I will do when I arrive is to take stock of that response, see how it's being put in place, and within 6 months determine whether more needs to be done. So to go back to your question, with respect to how to make sure that the governance structure works, it's management of committee and it's management of the various policy committees to ensure that they work as they should. It is ensuring, I think, that this oversight committee, which again we at the institution, we within management, if you will, can only ensure in terms of being cooperative and responding effectively to the reviews that come from the Oversight Committee, making sure that that is an effective process and that is an effective process early on. And then subsequently, it's with the interaction with this committee, obviously, which is our principal public accountability.
I'll leave it there, having signalled that probably in about 6 or 8 months' time, those will be questions I'll be asking you.
Clearly.
Might be worth just picking up on a couple of the points you've made there. Do you think that the bank should have a responsibility, a formal responsibility, to respond to reasonable requests from this committee for information or retrospective reviews to be conducted by the subcommittee?
Should we, I'm sorry, Chairman. Should we respond to the requests of this committee? Yes.
Should you have a formal responsibility to respond to such a request, to a reasonable request?
I would view that we have a responsibility to respond to reasonable requests of this committee.
So you won't have any objection to having this put in statute?
I'm sure there's something I'm missing, but I don't have any objection.
It sounds as if, even though it's missing, you're happy to say yes to that. Are you?
it sounds reasonable, yes.
Yes, exactly. So it does to us. We haven't succeeded with that one so far, but as you say yourself, we're all reasonable men around this table, and that's what we've been asking for some time. Some of them clearly not. The court.
Yes.
Do you think that an 18th century name attached to this structure is sensible in the 21st century? Do you think it might be plausible to be able to think of something else?
Yeah, I would view the court as a board, if that's the question. I hesitate as a foreigner coming in and changing and suggesting any changes to some of the longer traditions of the institution, which is, but this is distinct, those traditions, the name of the court or the board, I would put in those longer traditions. Others should make those judgments rather than me.
Okay. The subcommittee that's been given the job of doing these reviews, and you referred favourably to them, doesn't have any staff at all, so I understand. Do you think it should be given some staff seconded to it from within the bank, as we propose in our report, for a period with the duty of assisting the board or subcommittee of the board in performing this oversight role?
I would, yes, I mean, in terms of conducting the actual reviews,
I'm talking about
the members of the members of the court
secretariat to assist it in thinking through how to do this work
that would
on a
then,
permanent basis.
Provided that we rotated through those members of the secretariat, it would be quite possibly what should be a positive learning experience on both sides for that. So,
So you support that as well?
Well, it's the first I've thought of it, but it seems a reasonable.
Seems a reasonable idea. And do you think that when these reviews come back, the court or board should be expected to assess the merits of these retrospective reviews that have taken place? The substance.
The merit, you mean the quality of the review or the quality
of the review and of the points that the reviewer has made? Well, I think... and to be prepared to come before this committee and explain why they think, well, there's some very good points here or there are some very weak points here.
The findings of the review would obviously be... I mean, the review is for the benefit of the first the oversight committee, but then ultimately the court and the institution as a whole. So, so there has to be reflection on it. I mean, my understanding is that the court has appeared at this committee. My understanding as well is that records of minutes of the court will be furnished to the committee. So it seems reasonable to.
Our problem, though, is that at the moment, the court's formal responsibilities are confined to commenting on processes and procedures, not on the substance of the work they're commissioning. So they're in the extraordinary position where they commission a report, and then they're not permitted to offer a view on its contents. We think that is, as I just said, extraordinary, and we think that needs to change.
I guess I would presume that any review that is commissioned by the court would become a matter of public record, that the recommendations in that review, or the observations in those reviews, that the expectation would be that senior management, myself and other senior management would have a duty to respond to those recommendations. And that first would be to the court, but obviously to this committee if the committee took an interest in it.
Yes. But what I'm asking is whether you think the court or the board should be capable and be expected of being capable of expressing a view.
A view
about the merits
of the recommendations.
Yes. Of retrospective reviews. Does that sound reasonable, Dr. Carney, or is this can we park it in this reasonable place that you've created for all these suggestions?
Yeah, well, I think the only hesitation I have is the line, which I don't think you're suggesting, but I'll just put it on the record, is the line between review of process resourcing and then review and influence on policy decisions.
Current policy decisions.
Yes, but retrospective, if retrospective is last month, it will influence current policy decisions. So there is a line here where, I mean, I think, and I'm sure,
where they would
interfere,
where they will interfere with the committees, the other committees.
There is a danger.
The
There is a danger where that could happen, and of course, what happens there is that the accountability is blurred, which is what nobody would want. And so this has to be somewhat circumscribed. And I do believe that with any of the reviews, whether they're commissioned by the court, commissioned by management, commissioned externally, that it's the duty of senior management to respond directly to those observations and recommendations.
Okay. Well, I got 2 out of 3 into the reasonable car park, so I'm reasonably happy. Can we turn to monetary policy? I mean, you've made a number of interesting remarks about monetary policy recently, to say the least, and you've got a number in your in responses to the questionnaire. Is the UK's current monetary framework the right one for existing economic conditions?
Well, I would say that the experience both in Canada shares the monetary policy framework of the UK. It's a flexible inflation targeting framework, a symmetric target around 2%. I would note, as I believe I did in my written submission, that what we do in Canada is we review our framework every 5 years. There's a public review process, and then that framework is either amended or reconfirmed through effectively an exchange of letters, a joint statement by the Bank of Canada and our Treasury, our Minister of Finance. And we have found, and I personally have found, that that's a very effective process because it ensures that there is constant learning about the operation of the framework and that there is shared understanding about the flexible word in flexible inflation targeting. And particularly over the course of the post-crisis period, where flexible inflation targeting is operating in a different environment, and in the case of the United Kingdom, an exceptional environment, I would suggest that it's important to ensure that there is buy-in, if I can use that term, to the existing framework. Now, I start from a position, to answer directly your question, I start from a position where flexible inflation targeting, in my opinion, is the most successful monetary policy framework that has been in existence. So the bar for change to that framework, the overall framework, is very high. But I would note that that there seems to be an appetite for some debate about what exactly the framework is. And what alternatives could be to it, and that should be encouraged.
You said that we need buy-in, as you put it. Have we got buy-in now?
Well, I'll go to the heart of the issue, or part of the issue, which is that one of the questions that has to be answered in these types of frameworks is how much flexibility can the central bank exercise in returning inflation to target? And I'm referring specifically to flexibility in terms of time, because there is a series of judgments made by the central bank over what is the optimal path to return inflation to target, and optimal in the sense of what impact would returning to target quicker or more slowly have on output and employment in the country. In Canada, in general, we return inflation to target over 6 to 8 quarters. But 25% of the time, since we've recorded our forecast, 25% of the time, we've done it less than 6 or more than 8, and in some cases 10, 11, 12 quarters. And the reason we've done that, we look to clearly explain the reasons behind it. For example, right now we're taking a little longer to return to target because we have issues with the rise of household credit and issues in the housing market. So we are, even though rates are only at 1%, we are leaning into the wind, if you will, on monetary policy to help reinforce macroprudential measures that the Government of Canada has taken and slow the rate of growth of credit in Canada. But that's a very clear, transparent process. That's the exercise of flexibility in that regard. The issue in the United Kingdom, one of the issues in the United Kingdom, is the speed with which inflation is returned to target from above in an environment of necessary public and private deleveraging. And what's the path of what's the optimal path of monetary policy in that environment, given the impact of different paths on output and employment. So what discretion does the central bank have? And that's where there should be buy-in, because it's a delegated authority, responsibility to the central bank.
Okay, so have we got buy-in at the moment?
It's more a question for, I think that the debate the response to remarks that I made and what was read into remarks that I made suggests an appetite, at least to me, for a proper debate about the monetary policy framework. I noted that the Chancellor said he welcomed that debate. The bar for change is high. I agree with that. The bar for change is high, but there should be that debate, a relatively short debate, because I don't think prolonged uncertainty about the framework is in anybody's interest, and then either a reconfirmation of the existing framework or a change.
Very interesting. Stuart Hosey.
Dr. Carney, irrespective of the debate or the outcome on the monetary policy framework, we're still going to have a situation which is different from Canada. You reach the decisions there by consensus in the Governing Council. The decisions here are taken by the MPC on the basis of one member, one vote. Yeah. Some internal, some external, some other external observers who can't vote. Will that be a culture shock? The way in which the MPC determines what it does?
I don't think it's a different way of determining making these decisions, but it's proven itself to be an effective way of making these decisions. So I look forward to it. In the Bank of Canada, I operate in an environment, as you say, of consensus. That's absolutely clear. But in other environments, it's more overtly contentious.
This is actually quite vital. I mean, you've been incredibly successful, but it is in that on that consensual basis within the bank. Are you ready for strong-willed external MPC members to publicly disagree with you?
Yeah. Yes. Well, I think some already have, but I'm sure I'll get more.
And are you prepared to be outvoted?
Yes. Yeah. Yeah. I mean, I would like to be. Forget the phrase earlier, but I'd like to be on the right side more often than not. But obviously, I would fully imagine that over the course of my term, I would be outvoted.
Okay. What do you think of the way? I mean, you spoke about transparency a little earlier. What do you think of the Bank of England's inflation report and its quarterly bulletin, its main public-facing publications?
Well, I think that in many respects the inflation report was a leading, was best practice when it came out. It's had a number of innovations since. As I think fairly clear, at least in my reading of the Stockton report Stockton review, there are suggestions in there that could potentially be taken on by the bank, which would further improve the inflation report. For example, greater clarity about policy judgments that are made, alternative scenarios potentially that could be shown, so that there's a potentially greater disaggregation of the forecast. It is a less disaggregated forecast than some others that are put out, and so all of these. My understanding is all of these. I'm certain that all of these recommendations are being looked at by the bank, but I would expect that some of them would find their way into a revised inflation report in due course.
And would you like to see policy options, as you've just described, put in to these documents?
I think that there is value from time to time of alternative scenarios, and there is certainly value in every case in highlighting the core assumptions that drive the forecast. So I'll give you an example, if I may. I'm going to rely on the Bank of Canada. Right now, what we particularly highlighted in our equivalent of the inflation report that came out 2 weeks ago was the export response and the investment response that's required to get the economy back to potential. The fact is there is a large rotation in the components of demand in Canada that we are expecting over the course of the next 2 years. But it is sizable, and reasonable people can disagree about the likelihood of that happening. And if it doesn't happen, obviously we'll have an implication for output inflation and ultimately monetary policy in Canada. So that's something that we wouldn't do as a matter of course. We use a variety of charts and boxes to explain this. We wouldn't do as a matter of course, but we did because it was particularly relevant to this forecast. So it's that type of communication.
That's helpful. Just one final little technical question. The Bank of Canada meets 8 times a year on monetary policy. The MPC meets 12 times by statute. Do you think 12 is too many? 8 is enough? 8 is too small? What would you do in terms of the frequency of this kind of meeting and determination?
Well, it's by statute, and I can't imagine the statute would be reopened. It is reopened for this issue. It's certainly enough to meet 12 times. It's certainly enough.
Is it too many?
It verges on too many, yes.
Okay.
Yeah.
Jesse Norman.
Thank you, Mr. Chairman. Dr. Carney, you've very interestingly said that you think there should be a brief but proper debate about monetary framework. Do you think that's also true about quantitative easing?
Well, my understanding is there is a review that has been launched by this committee on quantitative easing.
No, but by the bank. Do you think that the bank should actually have a wider consideration of the full effects?
Well, I would hope that the bank would be invited to contribute to this committee's review of QE. But yeah.
I think we'd be delighted. Thank you very much.
Yeah, you might have to wait until. But I understand. I mean, I understand the interest of the committee in the wider effects, and your personal. I read your piece this morning. Your personal interest in that, which is shared by others. And I'm aware also of the exchanges that have taken place in the past, where the distinction. And it's not going to surprise you as a central banker. I start from a position which is very similar, if not identical to those of the current management of the bank, which is to look at the wider economy effects, to root quantitative easing in the context of the bank's remit and the effectiveness of achieving that remit, to recognize that there are distributional consequences of QE, as you pointed out and as others have pointed out, but to observe that all monetary policy has distributional consequences, and that the response to those distributional consequences of quantitative easing is more properly the job of others as opposed to the bank in and of itself.
I mean, in Canada, flexible inflation targeting has yielded a rate of inflation that's fractionally higher than 3% over decades. But in this country, as far as I understand, two decades.
No. Sorry. The flexible inflation targeting has yielded inflation of 2% in Canada over decades since 1991.
I apologize if I said.
Just took inflation expectations.
If I said 3, I apologize.
Yeah.
Thank you. The point I want to make, though, is in this country, we've had a very long succession of quarters in which inflation has been well above the target. Now, do you think that means that inflation targeting is too flexible in this country? And if so, is it put it this way? Is it aiming? Is that because they're aiming high, or just too tolerant?
Well, I think that a couple factors. I would agree that the MPC is quite appropriately looked through a series of one-off shocks, upward shocks to the measured inflation rate, and that it has appropriately provided stimulus to the economy that's facing very large headwinds, as you know. I think the nature of the question, though, reinforces the point I was trying to make earlier, which is that there should be a shared understanding of the flexibility that's there. So in other words, over what period does it make sense to return inflation to target? I think it's fair to say that in a number of those circumstances, the actual expectation of the MPC in good faith was that inflation would return to target sooner than it actually did, because there were other shocks that occurred. I would stress that my view would be that it's important, again, I'm slightly repeating myself, but it's important that there's a shared understanding that there is flexibility and why there is flexibility in terms of returning to the timeline, first point. Second point is that in these exceptional circumstances, the exceptional economic circumstances that the UK is facing at present, with inflation above target, as it is at present, in the context of this discussion on the framework, I think it would be quite useful to have a shared understanding about what potentially is the optimal timeline to return and why, what the impact could be on employment, what the impact could be on output. And I have suggested this in broad terms, that there is merit to considering some sort of Federal Reserve style, and I apologize for the jargon, but threshold-based guidance. And the question in the UK is, as it would be in Canada if we were in that situation, is does one make that time contingent or state contingent? Is it around a particular economic variable which indicates?
So in terms of my question, too tolerant rather than aiming high. They've been too tolerant in monetary policy rather than aiming higher.
I think to go. Yeah, I've no reason to doubt the MPC, and I think further that in looking through these shocks, they have ensured that there has not been a deeper stagnation in the UK economy.
Dr. Carney, your 11th of December Toronto speech, you talk about many things, but I want to focus on forward policy guidance. Your experience in Canada was that in April 2009, you announced that the policy rate, the interest rate, would be held until the end of the second quarter of 2010. You were pre-committing to low interest rates, conditional upon the inflation outlook. What was the evidence on which you based that? Where has that worked before successfully?
We looked at this. I would say a couple of things. One, and I'll get to the specific policy decision in Canada as part of my explanation. General view that is not shared by all central banks, but the general view within the Bank of Canada, which certainly I share, is that in normal times, policy-based guidance is relatively ineffective. So publishing an interest rate path is something that we looked at, and we decided against the Bank of Canada because effectively it wouldn't move market expectations, and quite frequently the conduct of policy was materially different from the path, the expectation at the time. And on the margin, that is another thing that the central bank is, quote, wrong about, withdraws, reduces its credibility, and go from there. That's our view. There are some central banks, fully respect, that continue to publish interest rate paths in, quote, normal times. But our view is once we got to the zero lower bound, the lowest interest rates could go, that we were faced with a couple of choices at that point because we felt that the economy needed additional stimulus at that time in Canada. One was quantitative easing. We could have credit eased. And thirdly, we felt that we could use communication to provide the extra stimulus. Now, we were not in the position that the Bank of England was in when it reached the zero lower bound, where the UK economy needed considerably more stimulus. We needed a bit more stimulus. And so our judgment was, given the costs and benefits of quantitative easing and potentially credit easing, our view was that we would use communication in order to help manage market expectations, because market expectations at the time were for a sharper increase in interest rates sooner than were our expectations. There was a material difference in our view on how long interest rates would be at that zero lower bound versus the market. And so within the bounds of our inflation target, we did our best to credibly commit that we would keep rates low at that level for, at the time, 15 months. Now that had a couple of effects. It had an immediate effect in the money markets and out the interest rate curve, an immediate measurable effect, which persisted. And we've got event studies of this. Mike Woodford has done event studies. Other people have looked at it. So that persisted. So there's a direct sort of pass-through effect to broader financial conditions. But I think as well, which is harder to measure exactly, but I firmly believe did happen, is it had a very important effect in that it reached over the heads of central bank watchers and the financial markets and directly to Canadians and sent a message that there was going to be stimulus for a period of time, that in effect borrowing, and remember that the Canadian banking system was functioning well, so this was true, that borrowing was available at unprecedented rates for a period of time. So that people could plan and put in place, whether they were going to buy a house, renovate, make an investment. They had enough time to go out and act on this. And I can tell you anecdotally, this was everybody knew about this commitment in Canada. Everybody who was active in the financial system knew about the commitment in Canada, and it had an effect. So our experience has been that this is effective. Now, it was a conditional commitment, as you know, and as you know as well, in the end, in part because of the response of households and businesses to the commitment, we ended up raising interest rates sooner than we had said, because we had made our commitment conditional on the outlook for inflation. And our view was that if we kept it on, by the time we got to the spring of the following year of 2010, our view was, well, if we kept it on, we would actually run a risk on inflation. If one brings to the situation in the UK today and thinks about the potential use of guidance in this economy, and I should preface all of this in that, as you're all aware, I'm not the governor of the Bank of England. I won't be for another 5 MPC meetings. The MPC is meeting today and takes its own decisions. And so when I talk about policy and policy options, I'm talking in the general, even though I'm trying to use a UK-related example.
Understood.
Because lots of decisions will be taken before I arrive, and the economy could be in a different place by the time I arrive. That said, in the UK context, I think there is a valid discussion to be had about the potential use of this tool to provide additional stimulus if it's appropriate. Again, within the context of what's the time path for returning inflation to target. And I'd further add that given some of the challenges with time contingent guidance, in other words, rates will be low for a certain period of time, that some lessons, I think, can be drawn from what the Federal Reserve has done with state contingent guidance.
Just following up that point, the Fed seemed to have gone further, and you draw this to our attention in your 11th of December speech, because apart from pre-committing in the normal way that they often do, they went further. You say, for a considerable time after the economic recovery strengthens. Is that something that we should have as part of the debate you refer to when you take up office?
Well, this is one of the judgments about the optimal path for inflation and the optimal path for the economy, and where.
But it's actually a pretty much open-ended pre-commitment, and I presume it will be conditional on the inflation outlook, as you pointed out. But you quote, and I'm just trying to understand whether you're quoting this with approval, Dr. Carney, on the 11th of December, your Toronto speech, for a considerable time after the economic recovery strengthens. You refer to your happy experience in Canada in the speech, and I'm getting and other commentators have got the clear impression that this is something you're very attracted to.
At the zero lower bound.
At the zero lower bound.
At the zero lower bound. I thank you for drawing attention to it. At the zero lower bound, in order to get sufficient momentum in the economy to justify an exit from the zero lower bound, that may, and it's situation specific. It is situation specific, and it requires analysis and clear exposition of why that might hold in the UK, when it does hold in the US, I believe that, and did hold in Canada. Was certainly the case there. That a need to develop sufficient economic momentum to justify moving off the zero lower bound. In the case of Canada and in the case of the United States, and I would suggest also in the case of the UK, in all of those cases, the extent to which that strategy is pursued is bounded in some way by the actual outlook for inflation. So in Canada, we had a conditional commitment, conditional on the outlook for inflation. In the current guidance of the Federal Reserve, which is that there was not the possibility, not their exact words, but effectively their words, of tightening policy in the United States until unemployment falls below 6.5%. They have they bound that pledge with unless the outlook for inflation is above 2.5% 1 year out. So again, there is an outward bound on this, and I think in the design, if that were the view, and if circumstances ever merited it in the UK, something similar would have to be devised because this has to be consistent ultimately with and all of this I view as being discussed under a flexible inflation targeting regime. So it has to be consistent with that regime and ultimately bounded by the medium-term target.
My final question, it will be quick.
And a quick reply.
Adam Posen, who, as you know, left the MPC last year, has given evidence to this committee that such forward guidance was a gimmick. He's obviously sceptical. Is there evidence that you can produce, going back to my earlier question, of the success of this, empirical evidence to show that if a change like this were to be made, it was founded on serious empirical evidence? Because Posen doesn't seem to think there is such evidence.
Well, first off, the decision was made on the decision of the Bank of Canada was made on extensive analysis. Secondly, the ex post reviews of the effectiveness of the conditional commitment have found that it was effective, and I can furnish you a Bank of Canada working paper, and I would refer as well to Michael Woodford's Jackson Hole paper of just this past summer. So
it would be helpful to have
yes.
what you described in an earlier reply. You described it as an event study, I think, which sounds like the key document. George Moody.
Welcome, Dr. Carney. Dr. Carney, one of the things that a lot of people have zoned in on, and which has given a lot of people some encouragement about your appointment, has been your statement that monetary policy has a key role to play in ensuring economics reach escape velocity. Can you tell, I know you're 4 months away from taking over and you're in Canada, but can we take it as said that present monetary policy is not achieving escape velocity? And are you prepared right from the outset, do you have the courage the ambition to actually challenge present monetary policy, where its fixation or its fixation with inflation target?
The Thank you for the question. I'd answer the second part first, which is that obviously the responsibility of the MPC of the Bank of England is to discharge to the best of its ability the remit that's given to the MPC. And the remit as it stands is to achieve 2% CPI inflation over the medium term, as you know. So, exactly. And that is the best contribution ultimately of monetary policy. What I've tried to stress is this issue around the path to get to that medium term and the optimal path to get to the medium term, which I believe is, and I think the behavior of the MPC, or the decisions rather of the existing MPC, have demonstrated a concern with that as well. And to get to the first part of your question about escape velocity, I would say that it is entirely possible, and the only reason I hedge is that I'm not expert enough on the current situation in the UK economy and the forces affecting output and inflation. I'm not party to all the analysis of the MPC, as you know. I'm not a member at present, but it's entirely possible, in fact probable, that the current stance of policy is consistent with the economy achieving escape velocity. In other words, the economy, the UK economy, achieving a rate of growth, a sustainable rate of growth, into the headwinds that come from public and private deleveraging, which will be with this economy for a period of time. But the question is not where policy is today, but where policy is going to be tomorrow and in subsequent months and potentially years. And to draw it back to the earlier discussion, the question is whether there can be any clarity given about the potential path of that policy and whether that can be usefully given at the time I take office in order to provide.
The question is, Dr. Carney, will you be coming to the table in June immediately, recognising that we have flatlined for 2 years with fresh monetary policy initiatives that may raise the question, valid question, of its effect on inflation, but be prepared to say it's a balance that must be discussed but seized upon and decided upon?
The stance of policy, my views on the stance of policy in July, I take office the 1st of July, will be conditioned on the outlook for output and inflation in this country. And so I don't want to pre-commit to my stance at that point, because it will also be importantly affected by the decisions of the MPC today and in subsequent meetings. Your point, though, on instruments is that clearly it's the responsibility of the MPC and the Bank of England as a whole, the staff of the Bank of England, to continually review the effectiveness of the various instruments that are available to monetary policy, and if stimulus is required, to determine not just the cost and benefits of existing instruments, whether it's QE, funding for lending, other asset purchases, changes in the bank rate, potential communications, but to devise, if necessary, new instruments that could provide stimulus more effectively if it is required. And we certainly will do that when I'm there.
I'm hard put to understand exactly what you're saying to me in terms of fresh initiatives, but the Chancellor has been in the paper with a speech yesterday actually asking the Monetary Policy Committee to be a bit more aggressive in terms of stimulating growth. Will that be your starting point? Do you understand the urgency in this country about stopping idolizing and focusing totally on inflation policy and actually putting into place, as the Chancellor can't because of the fiscal difficulties, the ball for growth is in your court? And are you coming, does this statement mean you understand that and you're coming to actually from day one go for accepting a partnership with the Chancellor in terms of understanding you've got to do something for growth because he's fiscally too tied in?
Unquestionably, when I come to the table, there will continue to be considerable slack in the UK economy, as evidenced by the labour market and more broadly across industry. unquestionably that will be a situation which merits, for a period of time, considerable monetary policy stimulus. Those judgments about exactly how much to calibrate, which instruments to use, have to be guided by the remit that's given to the bank, which the 2% under flexible inflation targeting, the 2% inflation targeting. But I think, as I've stressed, that in order to achieve an optimal, the ideal, the best outcome in terms of output and inflation, it's the responsibility of the bank. It continues to be the responsibility. It's discharging at present, but it continues to be the responsibility of the bank to lay out the potential path back to sustainable growth in this economy that's consistent with that 2% inflation target.
Within the present remit, yes. But as you'll have a honeymoon period, and as the Chancellor is anxious for your assistance in the bank, would you consider taking that window of opportunity to persuade the Chancellor to go for a dual mandate along the lines of the Fed, which would help you with the voting members of the Monetary Policy Committee who may stifle your individual efforts to actually change monetary policy?
I said at the outset of this section that I think there is merit in debating the framework in Britain and coming to a relatively quick conclusion on it. I would say as well that my view, where I'm sitting here today, is that the best framework remains flexible inflation targeting. That is the best framework, properly operated, properly understood, is the best framework, and using the full power of that framework and the tools under that framework, that is going to be the best contribution, not just to price stability, but to full employment in this country and in my home country at present. So I don't start from a position of looking for to directly answer your question, of looking for a dual mandate. I do start from a position which I believe is shared by the MPC, the current MPC, which is in the current environment, considerable monetary policy stimulus is required in order to take up that slack in the economy as quickly as possible. And if more is required once I'm in office, I will do my best to convince my colleagues to pursue it.
I think I've got 5 colleagues who want to come in on this area, so I would ask them if they could be reasonably brief. Pat McFadden.
Morning.
It is still morning.
Okay.
Have you had any discussions with the Chancellor during the interview process for the job or subsequently about changing the MPC remit or considering changing the MPC remit?
We have had a couple of higher level discussions along the lines that we've had today, not as detailed actually as we've had today, but higher level discussions along the lines we've had today about the merits of effectively reconfirming, of looking into the remit and considering whether there should be a change. Not discussions that lead to a specific view of what that should be, but on the general issue. And I'd reconfirm that subsequent to my December speech and the reaction here to that speech, that was a natural discussion to have. Okay, given that there seems to be a broad interest or sufficient interest in at least discussing this, it makes sense to have this more broadly.
You've said that you think there's an appetite for the discussion, that you've had some high-level discussions with the Chancellor. Can you give us an indication of what the process for this might look like? You've said that it's something that happens periodically in Canada. If, on taking office, you're going to pursue this and look at this, what will that look like? On what timescale? Who will be involved?
Well, any decision, as you know, on the remit is a decision for the Chancellor, for the government, so I wouldn't presume to give directions, and obviously what I can comment on is how it happens in Canada, and the way it happens in Canada is that since the adoption of inflation target in 1990, there have been reviews every 5 years. And in the run-up to those reviews, the Bank of Canada does a lot of research, and interested academics do some research, and then we have a series of discussions with our colleagues at our Department of Finance, our Treasury equivalent, and then a decision is made. I think I've made the point that I see value in having the debate. It's clearly a decision for the Chancellor and the government whether they're satisfied with the level of debate or the shape of the debate, and are satisfied to reconfirm or adjust the remit as they see fit. So I'm hesitating to dictate a process to those who have to make those decisions.
We've discussed in the questions in recent minutes some of the options that have been canvassed for this, whether it's guidance with thresholds and so on. Another one that you've discussed is nominal GDP targeting. Can you tell us your thoughts on that, and whether you think it's a serious runner as an alternative to the current remit?
Yeah. Well, on nominal GDP targeting, and I would go further to specify that this would be a central bank targeting the level of nominal GDP. So real GDP, as we conventionally think about it, plus the level of GDP inflation, and the central bank would look to target the trend of that level. And to put it into context, as I'm sure you're aware, in the UK today, the gap between the pre-crisis trend and now is about 15%. Now, almost all that gap, in fact, all of that gap and a bit more, is because of a shortfall on real growth relative to trend. The actual price level has more or less kept up to trend. But nonetheless, this gap in nominal GDP has made the deleveraging process much harder for individuals because there's less income, much harder for government because of the fiscal feedback loop that's there, and has challenged the recovery. There are advantages, in theory, to nominal GDP level targeting, particularly when an economy is at the zero lower bound, and the advantages are based on inflation expectations, augmenting inflation expectations, and reducing effectively real interest rates with a degree of credibility, with a higher degree of credibility than under conventional inflation targeting. And the reason for the higher degree of credibility, in theory, is because, to use the jargon, bygones aren't bygones under nominal GDP targeting. So if in the initial years of providing stimulus to try to get back to the old trend, sorry, I should be doing the trend like this, the old trend, there is an additional shortfall, the central bank has to make it up because the gap has widened, and that brings on more stimulus, and the knowledge that more stimulus would be provided in that event provides stimulus in the current environment. That credibility is there. The other advantages of nominal GDP targeting relate to when there's a supply shock. So, for example, the supply shock that we experienced here because of higher oil prices, and the central bank is better able to look through those short-term supply shocks, and it actually, in what seems like a very distant past, is better able to respond to positive supply shocks, positive productivity shocks, because that actually encourages some increase in interest rates to lean into the wind against that, which reduces the prospect of financial imbalances. So those are all the benefits, or the core benefits of nominal GDP targeting, level targeting. The challenge is that people have to behave in reality as economists think they will behave in theory. In other words, there has to be a widespread understanding of the objective that the central bank is pursuing. Now, after 20 years of inflation targeting, decades of inflation targeting, most people will know, or many people know, follow that, okay, the bank's supposed to get 2% inflation. I know when we look at businesses in Canada, when they run their economic, or their numbers, their forecasts, if they have an inflation assumption, they just use 2%. They don't bother thinking about our monetary, and that very act reinforces the effectiveness of the policy, that heuristic, that way of thinking about where inflation is going to be. For nominal level GDP targeting, you have to think about where the gap is relative to some trend, a trend that is determined by the central bank, and it's much more complicated even for experts to follow, let alone the man or woman on the street. We've done a fair bit of research on nominal GDP targeting at the Bank of Canada and related variant price level targeting, and what we found is that if a significant proportion of people, agents in the economy, don't follow the rule, don't understand what the central bank is doing, effectively, the main benefits of nominal level GDP targeting go away, and flexible inflation targeting dominates even in a zero lower bound scenario. So our view, and there are some other downsides with it in terms of measurement errors, in terms of the fact that you're ultimately targeting GDP inflation, which is in the consumer basket, so you're targeting a level of inflation which doesn't directly map to the level of inflation that individuals experience. Implicitly, that's what you're doing. So all of those factors leave me far from convinced of the merits of moving to nominal GDP targeting. But these are, it is a valid part of the debate if one's looking at a framework because, and I'll end with this and pass back, because its best prospect of success, its most power, and its biggest payoff is in a circumstance when an economy is in exactly the position that the UK economy is in. And so it's entirely appropriate for it to be analyzed in that context. But as I think I've indicated, given what I have experienced, what I've known, the research I've seen, as I sit here today, my view would be that flexible inflation targeting and potentially deployed in a slightly different way, depending on the circumstances, would remain a superior alternative to a shift of framework.
It's a very full explanation, thank you. Does part of you worry that in the discussion of these options, there might be a danger in confusing people about what the future MPC remit might be, creating uncertainty about a regime which has been in place for a long time and which, as you say, is well understood? Or do you take the alternative view that actually the conventional tools that have been used in the UK so far have not allowed us to reach what Mr. Moody referred to, your phrase of escape velocity, and growth has been so flat and confidence in the future has been so low that with the arrival of a new governor, it really is time to reconsider the measures in the policy basket in front of us?
Well, the latter. I think that the economic circumstances here are clearly exceptional, and as the debate has shown, that there are different points of view, and there is a value to getting those out in the open and coming to a speedy conclusion on that, and moving forward. And as an institution that has delegated responsibility, obviously, reconfirmation or reconfirmation of exactly what exists or some variant of that is what we need in order to discharge our mandate. But I think the process, if I may just reemphasize, I think the process helps address your concern in that if there is a widening range of opinion of what's right and what the role of monetary policy, the process of that debate and reconfirming my view, the value of flexible inflation targeting is in and of itself valuable and important.
So even if we looked at all these and we ended up where we are, your belief is that the process of going through that is itself beneficial?
Yes, and that is the experience that we haven't had necessarily difficult debates in Canada, but there have from time to time been important issues over the past 2 decades that have come out during these review processes, and it is valuable. It is valuable because it leads to broader shared understanding of what the bank can and can't do.
Okay,
John Mann.
Would it be right to presume, from what you've been saying, that you think it's an appropriate position to take that the Bank of England should feel confident in questioning its own remit?
I think that the decision, clearly the decision of remit is a decision for the government. The bank is obviously very well informed on not just the conduct under and the effectiveness of the current remit, under various alternatives. In fact, some of the members of the bank, Charlie Bean, for example, are leading experts in some of the alternatives. So I think the bank can play a role in informing that debate.
Well, that's not quite the same. I mean, would it be reasonable for the bank to question its own remit, presumably on the basis it felt that there's a question to be asked?
I think that if the bank were invited to question its remit, it is reasonable to respond.
What if the bank wasn't invited? What if the bank felt that it was appropriate?
It depends on how that questioning were conducted. And here's what I mean, is that the bank is given a remit. The bank's job is to execute against that remit and do its best to achieve the objectives of the remit, whatever remit is given to it by government, delegated responsibility. And to go to Mr. McFadden's point, sort of active questioning of that remit can sow confusion about the remit and therefore make it less effective than it otherwise would be. So I would make a distinction between a circumstance where debate has been invited, question has been asked. It's appropriate for the bank to respond to that. It's obviously appropriate. I would also say further, if I may, that it's appropriate as normal course through the research program of the bank that the bank would look at various ways to improve monetary policy frameworks, macroprudential frameworks, publish on that, give evidence, go to conferences, those types of things. But that's distinct from having a bank view that the remit should be changed. And again, I'd reemphasize that once a remit is given, and the remit I know is given annually, once a remit is given, then the bank's job is to execute against that.
In answer to an earlier question, you stated that the policy of the Bank of Canada and the Bank of England were the same, quotes, flexible inflation targeting, and that's what you said. I recall questioning the current governor on precisely this issue at some length, and indeed, I believe it was in 2009, and I've returned to the issue with him since. But very explicitly, I raised the issue with him for quite some time. And he was explicit that there shouldn't be flexible, that the inflation target was the inflation target. So it's not the current policy as outlined by the governor. So you're suggesting quite a significant change of policy happens to be the one that, in a sense, I was suggesting to him. So why are you suggesting it's the same policy?
Well, two things. I'm afraid I'm not familiar with the exchange to which you're referring with Governor King, but and I'm familiar with, but I am familiar with speeches and others of Governor King where he does refer to flexible inflation targeting, and in fact he's one of the He is one of the intellectual founders, if you will, of inflation targeting through his research. What we share between the Bank of Canada and the Bank of England is a symmetric target, 2%, a commitment to floating exchange rates, a policy that's anchored around a medium-term objective to achieve that inflation rate, a recognition that is the best contribution of monetary policy to economic outcomes, and a variance in the time horizon to return to target. Where I think we have differed, and some of this could be the result of the structure of decision making, it could be for other reasons, but where I think we've differed since the crisis has been in the Bank of Canada's definition, maybe greater precision around the definition of what flexibility is and flexible inflation targeting, and how we have deployed that flexibility initially with a conditional commitment, as Mr. Ruffley raised, but also more recently, as I referenced, as we've leaned into the wind in the face of too rapid credit growth.
Of course, eyebrows count for quite a lot, but the exchanges I've had with the Governor were unambiguous, and this terminology has suddenly crept in, flexible inflation targeting. I note that in media briefings overnight, the Chancellor of the Exchequer has used exactly this terminology, and some would suggest that it rather suits the Chancellor in terms of fiscal policy to have such a concept suddenly broadened. And I wondered, as the Chancellor has been using precisely this, how quickly are you going to pour some salt on his head to create a clear independence between yourself as the new Governor of the Bank of England, or are we going to see a shift in that, whereby the role becomes more political, less independent?
First, a point of detail, but an important detail. The terminology flexible inflation targeting is not new. The literature on inflation targeting, the academic literature, and the policy usage of the term extends back decades. So this is not a new term.
Its use in this context, in this country, has come in since you raised it.
Well, I would suggest that the practices of the Bank of Canada initially, but more importantly, of the Federal Reserve recently, have brought, and recalling as well, that it was referenced, Mr. Moody referenced the dual mandate of the Federal Reserve, but the Federal Reserve has defined itself within the past year as a flexible inflation targeting central bank. Defined itself, within the context of its dual mandate, defined itself as a flexible inflation targeting central bank. So the conduct of policy of the Bank of Canada, and as I say, more importantly, of the Federal Reserve, has brought the issue of flexibility more to the fore. But you raise a crucially important point. There is no question, there will be no question about the independence, my independence as Governor of the Bank of England, the independence of the MPC, the independence of the institution. It's enshrined. There is a governance structure that is being put in place that this committee has very importantly contributed to, but there's an absolutely clear structure. We will get a remit. We get a remit. We execute that remit as best as we see fit. And no political influence will come to bear. It might be attempted, but will come to bear and have an influence on the execution of that remit. And that is why, quite appropriately, the focus has been, such focus has been put on accountability and governance. So,
but you'll see that the moment it moves from inflation target to flexible inflation target, that flexible is not precisely defined, which is why I happen to agree with that approach. I think it's sensible. However, one has to recognise that A, that is a change, and that B, there is a political dimension, not you or the bank trying to enter politics, but a Chancellor of the Exchequer trying to cling to your coattails because flexibility is great for politicians.
The point in this discussion, this broader discussion, which I very much welcome, is to define, circumscribe that flexibility. I think the point that I've been trying to make is that that flexibility does exist, and that flexibility is exercised from time to time to different degrees and with different degrees of transparency across central banks around the world. Best practice would be to clarify exactly how much flexibility the central bank has, in what circumstances, and then delegate to the central bank to exercise that flexibility as it best sees fit to achieve the remit.
Do you think we should judge your success on economic growth in the country over the next 5 years?
Yeah.
So I had one other. I'll
put in the last question now.
Well, my other's
Dr.
quite.
Carney will be able to.
I will.
Give a
My
reply
other's
to
quite
both.
separate, and it's because I met our equivalent. I was the only member who met our equivalent committee from Canada 2 weeks ago. And it's an entirely different question, but I would like to throw it in because I think it's important. To summarise, they suggested that one of the strengths of the Canadian economy was that the Bank of Canada had a strong regional input, and therefore it looked at the whole economy. You're moving from Ottawa, which is a small, relatively, city economically within Canada, to London, where one could, if wanted to be mischievous, call it the Bank of the City of London, rather than the Bank of England or the Bank of the UK. So quite separately, my second question is, are you intending to look at regional imbalance in terms of the culture and decision-making of the Bank of England, which some would suggest, both across England and the UK, has been one of its great weaknesses and one of Canada's great strengths?
Okay. Judgment of relative success in 5 years' time with respect to monetary policy is on price stability. Price stability as defined under the remit. 5 years is unquestionably the medium term. Unquestionably the medium term. And the remit as it stands, and quite appropriately in my view, seeks price stability. So the responsibility of the bank is to achieve that. There are various paths to achieve it, but it certainly has to be achieved, and that's how I would expect to be judged as governor with respect to that. Your second question. Yes, that is. I believe that is a strength of the Bank of Canada, and I believe coming in that it can be a strength of and is a strength of the Bank of England. There are 12 agencies across this land, and I intend to be out and visiting them all. It's important that we draw through the monetary policy process, that we draw input directly from those agencies because they're the ones out talking to businesses in the field, and that is what supplements more abstract, important but abstract statistical data and statistical models. And your point about rebalancing is absolutely right. I mean, this is one of the challenges in the UK economy, is ensuring that the rebalancing that is taking place between the relative weight of the financial sector and to some extent the oil and gas sector, but those two sectors, away from those sectors, two others that spread across the country, is necessary, and it's also its success or failure, relative success or failure, has an important impact on productivity, therefore potential and inflationary pressure. So it is highly relevant to the bank.
Said a number of very interesting things there, and I just want to be clear on what at least I think I've heard. On independence, you appear to be reasonably relaxed about the idea that a Chancellor might express a view about aspects of the conduct of monetary policy. Today he's reported as pressing the Bank of England over growth. That's a lead story in the FT. Have I got that right? First of all, more relaxed than has been the case.
Well, let me answer it this way. I don't anticipate making a large number of comments about fiscal policy, so I wouldn't expect a large number of comments from monetary policy.
Well, that's not quite what you said in your written evidence to us, is it? If you turn to your, well, you could if you wanted to, but in response to our question, should the Bank of England have a role in commenting on fiscal policy? Well, I've hedged just a little, haven't you?
Well, I hedged in. Well, I didn't hedge.
We have a duty to comment
in extreme circumstances where the fiscal position is such that it could imperil price or financial stability, which are the core objects of the institution. But as a general rule, the bank takes monetary or fiscal policy as given and then optimizes against.
I mean, it could be said that there has, since Bank of England independence in '97, been a bit of a non-aggression pact here, where you keep your tanks off the Chancellor's fiscal lawn and he keeps his tanks off your monetary policy lawn, or the Bank of England's monetary policy lawn. Am I wrong to have interpreted anything you've said on this to mean that you are more relaxed about there being a bit of a public debate than has taken place in the past? Do you want things to carry on exactly as they were with respect to the maintenance of that demarcation in debate?
Let me say a couple of things, if I may. First, with respect to the specific story to which you're referring today from FT, that's the sum total of my knowledge of, quote, the Chancellor's remarks. I'd note in that story that it indicated that I was meeting with the Chancellor this week. I'm not meeting with the Chancellor this week. I never was. So I take that story with a grain of salt in terms of the overall thrust of it, first point. The second is that I stand by, obviously, what I wrote in terms of our role and in commenting on fiscal policy. It is very much the exception. Obviously, we have to be informed about fiscal policy. We have to take it into our forecast. We have to make judgments about the multiplier effects of fiscal policy, but these are antiseptic, objective judgments that then against which we then optimize. Whether there's a and I think that, to be honest, I think that answers in terms of approach from the bank's perspective. But to go back to Mr. Mann's question, I guess what you were picking up in terms of independence, the value of a remit is that it's delegated authority and delegated responsibility to the institution to execute against that remit.
And then you should be allowed to get on with it.
And then we should be allowed to get on with it.
And so you don't want these tanks on your lawn, and you were suggesting we should take with a grain of salt.
Well, what I recognize is that part of the reason for the independence, in fact, a large part of the reason for the independence, is that difficult decisions on the monetary policy side, on the macroprudential side, will not always be met with shouts of joy, and so there inevitably will be commentary, and the bank's job is to look through that.
Okay. The second area where I just want to be clear that I've understood what you've said is on inflation and on dealing with inflation. You think first that we should have a debate about the remit, that we should get on with it, and that we shouldn't have an undue period of uncertainty, but that might include money GDP targeting as an approach.
Well, obviously, if there's a debate, it wouldn't be my contribution to the debate, but I clearly recognize that others would contribute it. How's that?
So you're going to sit quietly and let others engage in it all, like, for example, members of the MPC?
I would expect that those who have a view would express one if there were.
But you're going to stay silent.
No, I'll reserve the right to chip in, if I may.
So you do think there should be a debate about the remit, and that should be conducted in a way that creates the minimum of uncertainty. In other words, we should get on with it.
Yeah.
But it should take place.
I think it is taking place.
Yeah, and that you're going to participate in it.
I reserve the right.
Okay. And the second thing you've said, it seems to me, I mean, I'm conflating some extremely interesting remarks, but the second thing it seems to me that you've said is whether or not we change the remit, there's a case for interpreting the remit somewhat differently. You've said, for example, you're interested in pre-commitment, and you've touched on a number of other areas as well.
Actually, I'm glad you raised it for clarification. I think this could be this could be from my perspective, the principal benefit of that debate, right, which is not that the interpretation of the remit changes by dint of the bank reinterpreting the remit. Governor King, I thought in his last speech, spelled this out quite nicely in terms of the trade-off between the path of output and inflation, and that is something that was effectively delegated to central banks, but needs to be more broadly understood, and the extent to which that has been, I think this is a little harsh as an adjective, but adverb, unthinkingly delegated. It should be thought through in terms of how much flexibility is delegated. So what I wouldn't want to leave the impression with you is that I think that if there's not a debate, there's not a process, that then the bank can reinterpret its remit. It can't. The point is that through the process of discussing what the remit actually is, and this has been our experience in Canada, by discussing what flexible inflation targeting meant in an environment of low for long, which is what we're living in, where you have a well-functioning banking system and macro-prudential risk rising, what's that flexibility mean and how do you use it? We had that debate discussion, and that's allowed us to reinforce policies of the government and our bank supervisor.
Okay. The last point I just want to clarify on is you gave a very interesting set of replies to Pat McFadden about the pros and cons of an alternative approach. One issue that you only touched on obliquely, and I just want to be clear how much weight you attach to this. One downside is the current view, a well-established view, that an anti-inflation strategy depends crucially on the establishment and maintenance of credibility over time. It takes a long time to construct that.
Yeah.
And once you've got it, it's a heck of a risk to change it, because you accumulate that capital with great difficulty. You didn't make that point. You obliquely touched on it at one point. Do you agree with what I've just said there, or the description I've given for one of the arguments for caution before changing policy?
It is one of the reasons.
If I may just have one more point. You said at one point this other approach might be particularly appropriate to the conditions of the British economy now. Of course, that may not be the case later. And that brings into relief the question, should we change inflation policy to suit the seasons of the economy?
Two excellent questions. I would endorse what you said on credibility. I think that is a consideration. It's one of the reasons why the bar for change is high, as I've said in my written submission. I think we can reconfirm today. Secondly, yes, there is an issue with temporary adjustment, temporary adoption of a different framework for the economic circumstances. And as I think I've made clear, I'm not advocating a wholesale adjustment of framework to nominal GDP level targeting. Others have. I haven't. But I will recognize that the exceptional economic circumstances in which the UK is in at present and has been for a few years is exactly the type of circumstances in which one would consider doing this. So it is legitimate for people. It's understandable that people have suggested that adjustment. My view is that I'm not convinced, given the risks and other factors, and you rightly reinforce credibility, that it's a risk worth taking. In fact, my view is that using the flexibility under flexible inflation targeting, we can achieve with lower risk, more rapidly, more effectively, the same economic outcomes, and I mean broad economic outcomes in terms of output, employment, and inflation.
You're right, of course, to say flexible inflation targeting as a term of art in the literature goes back decades, but John is also right to say that it does seem to have come into pretty, to be given greater salience just now, and I noticed that even in that reply, it popped out. Brooks Newmark.
Afternoon now. I appreciated your Economics 101 tuition to Mr. Ruffley earlier. I'd like to, though, focus on QE a little bit more. The Governor has announced that further QE, today's announced that further QE, he's put everything on hold, has marginal impact on growth. Do you think that there should be further work on the efficacy of further quantitative easing?
Are you referring, when you say the governor's announced, is there an MPC announcement that's come out?
Yes,
okay.
just this morning.
You're ahead of me. All right. Should there be further work? I think that for all unconventional policies that the bank has either pursued or could potentially pursue, there needs to be additional work conducted. Yes, on both the benefits, but very importantly the costs as well.
Yeah, I guess the analogy I use with the governor when he was here is I've got an old MGTD 1953, and when I start it in the morning and it's cold, I pull out the choke and it sort of floods the engine and sort of gets it going. I don't keep the choke out because the marginal effect of further fuel in the car doesn't have the same effect. I'm fairly cynical on the effects of QE generally. That first 200 billion, I could see had a positive impact. Do you really see that there is much marginal benefit now to further QE?
Well, it's, to be honest, it's not a question I'm in a position to give a full answer to, because it is situation specific to both the state of the UK economy and the state of the UK financial system. And I'm not in the MPC. I'm not looking at this on a daily basis. I haven't done the analysis. So,
well, you must have done some analysis. This is a major economy in the world. You are looking at the Bank of England, and this has been their whole raison d'etre. Their whole main driver is to effectively keep buying up gilts, printing money, you're coming in, and I'm optimistic with you coming in. I look forward to you coming in because, as I said, I don't necessarily think that QE has been the answer to all our solutions when we do want growth. You've come up with some thoughtful alternatives in targeting growth. I'm asking you a very simple question, having looked at QE, not just in this country, but the US and the Eurozone and Japan and elsewhere. Do you think that printing more money today is going to have a significant or even a beneficial, marginal, positive impact on what you want to achieve and what I want to achieve, which is growth?
The work that we have done at the Bank of Canada suggests that the returns to QE have declined, particularly in the United States, as the scale of the program has increased. To some extent, that's natural. When you think about the main channel, in our view, of quantitative easing is through a portfolio balance effect, a shifting of investors from the risk-free asset into assets that start to have a risk. And that's part of the logic, as you, I'm sure, are aware, of why the Federal Reserve is concentrating increasingly on the mortgage market and then gradual potentially one would extend that more broadly if that were necessary into riskier and risky assets.
And you think that's do you think it's a good idea?
I think that is logical. I think yes. I mean,
you think it's a good idea? Because it leads on to my next question, which is that when thinking about asset purchases, should we be looking in a more broader way, including wrapping up SME loans and so on and so forth?
Yeah, I think that. Well, okay. May I take a step back, which is that obviously the responsibility of the MPC and what they're doing is to identify first whether additional stimulus is required. That's a discrete judgment, and then if so, how, and then to concentrate on those instruments that are going to provide the best stimulus with the least cost. And I want to stress again that with all unconventional policies, there are costs associated with those policies. With QE, there's potential issues around market functioning. There are broader political economy questions that this committee is looking into. There are issues related to QE, but I would say that the way I would answer the question is that in the current environment, it seems that the efforts of the bank, in conjunction with the FSA and the Treasury, to concentrate on ensuring that bank lending, and particularly bank lending ultimately into the SME, I view, I guess, as the SME channel most effectively targeted and improved through the banks, both through the funding for lending scheme and ensuring that the capitalization of those institutions is transparently adequate. Transparently adequate.
The government is really in the position to make a judgment on SME lending as opposed to credit officers and individual banks? Because effectively what you're saying, or what I know is sort of out there, is that the banks, because of Basel III and everything else, are shoring up their liquidity and their balance sheets and so on. So they got that pressure, but we're also, as politicians, saying we got to get the lending out to small and medium-sized businesses. Maybe a way of doing that is having the government stand sort of behind that somehow. Is that a good idea or not?
In the manner in which you expressed it, I would say a superior idea is the construct of the funding for lending, because what happens there is that first off, it's neutral. It's the decision of the bank whether or not to extend the marginal loan. It's advantaged in terms of the funding cost, obviously, if it does extend it, and it's also advantaged in terms of capital relief. But there's no direction to lend, and there's certainly no direction to which SME to lend to. What's been established is a neutrality across lending to an SME or another corporate, or lending establishing a mortgage under that scheme. So I think your point, though, to go back, you started with packaging SME loans, providing that.
And same thing with mortgages.
Doing
so
some sort of
other sort of asset purchases.
Asset-backed security, CLO, CDO, based on SME lending.
Which were a great success, by the way, weren't they?
There were elements of that market that were very few.
I was being
very
facetious.
Few elements of that market
I was
that
being
were successful.
Facetious.
So that's one potential channel. I guess what I'm suggesting to you is that a more direct and immediate channel would be to go through the banking system, not direct lending,
right? But funding for
lending effectively.
Okay. So when you come in, just to be clear, you're not going to really examine again the idea of actually buying other assets, because you're sort of that or not?
I think it's the responsibility of the institution to continue to continually, while we're in this circumstance, evaluate the different options, which would necessarily include buying other assets, and particularly if it's the current judgment of the MPC that additional QE has, and I'm using the quote that you gave me, a quote, marginal impact on growth. I hope that's correct. I don't want to be misquoting them.
No.
If the judgment is that, then the responsibility is, if the judgment of the MPC were to be that additional stimulus were needed, then obviously different channels would have to be used. Funding for lending is a channel that has started. There's some early encouraging signs. We have to see where it is when I arrive, but if it were required, one would look at that, but also look at a different range of alternatives.
Okay, well, my final question is, because I appreciate time's ticking on, is that there have been some good benefits of QE. It's kept interest rates down low. It's meant that constituents of ours who are mortgage holders have had relatively low mortgages. It's meant that corporations have been able to borrow hopefully a little less expensively than perhaps if there hadn't been any QE program at all. But the people who've paid the price are savers out there, and particularly pensioners. And many of us on this committee have many constituents who've saved up their whole lives. They're earning 0.5% or less on whatever savings they may have, yet sort of the inflation rate is, 3%, and probably on a basket of goods for pensioners' goods is probably closer to 6 or 7%. Do you think that's a price worth paying?
For the stimulus that's provided to date by quantitative easing.
Yeah.
I absolutely recognize that there are broader distributional consequences from quantitative easing. Pensioners in this country, pensioners in Canada are in difficult circumstances because of the low rates of interest. I would underscore pensioners in Canada are in difficult circumstances, and there's been no QE in Canada. And in fact, the differential between the 10-year in sterling and Canadian is, call it 10, 15 basis points, with actually the Canadian 10-year slightly inside sterling the last time I checked. So it's, there was a broad global reduction in interest rates, which is a product of the global economic outlook. It also is the product of global quantitative easing, but it's not just the product of quantitative easing in the United Kingdom. I recognize as well, as I'm sure you would, that the policy has improved, and it's hard to be exact on this, but has improved the valuation of other assets, which, depending on whether one's about to become a pensioner or whether one's an existing pensioner or whether you're running a defined benefit plan in surplus or deficit, accrues more or less to your benefit. Obviously, if you're on a fixed pension or you have a fixed savings and you're reliant on gilt rates for your consumption, for your income for consumption, then this is an extremely difficult circumstance. But the responsibility of the bank is the broad economy, and we have to keep that focus.
Andrew Lesson.
Sorry.
Dr. Carney, I'd like to talk to you briefly about the Eurozone. Obviously, the next 5 years, we all hope we'll see resolution of the Eurozone crisis. You've said the bank will need to support the government as it engages in efforts of the Euro area to refound the European Monetary Union. And yet, you, like many non-Europeans, may feel that actually Britain should just shut up and get stuck in there and not try and defend her own national interest against the interests of the whole euro area. So can you reassure us that in your determination as the governor to support the government as it engages, that your interest will be in promoting British national interest and not just a resolution to the whole picture?
Absolutely. I can reassure you on that, and I'll expand. I think that it is in British interests that European Monetary Union work for the economies that are in European Monetary Union, as you're well aware. This is Britain's largest trading partner and will be for the foreseeable future, certainly beyond the end of my term. And there are enormous challenges in Europe that remain in order to properly refound European Monetary Union and ensure that this economy returns to sustainable and balanced growth. The economy of Britain's largest trading partner returns to sustainable and balanced growth. I can tell you further from my experience at the G7, lesser extent the G20, but certainly my experience at the G7, that countries like Canada and Great Britain, Northern Ireland are actively engaged, have been actively engaged in trying to help devise solutions, whether they're monetary, financial restructuring or institutional solutions, and I'll get to that last one, which is probably the most important for your broader question, to help Europe help itself. And that has been a difficult and intensive process over the last several years, but it's been an important process to help ensure that the euro crisis was not worse for all of us. And obviously, if there's an economy, an external economy that's borne the brunt of the euro crisis, it's been the UK economy. And we need to keep that engagement, and I would anticipate moving from Governor of the Bank of Canada to Governor of the Bank of England that level of engagement, central bank to central bank, in terms of, I think we're moving from the acute phase of the crisis to a more chronic phase, but the crisis management element that is there would continue, and it's absolutely in Britain's interest. But when we get to the institutional side and the institutional development of European Monetary Union, they're very clear interests of Britain, and well, I would support, as does the government, the development of a true banking union in Europe. It's essential that the position of the British financial system, and particularly the City of London, is adequately safeguarded and recognized in the structure of that banking union. And I think the agreement, and I'm encouraged by the agreement that was struck in December with double majority voting around the single supervisory mechanism. I think it's the responsibility of the Bank of England and our role and the PRA within the Bank of England to be fully engaged in the interaction with the ECB, and of course with the EBA, European Banking Authority, to ensure that we are very clearly at the table, constructively engaged, but very clearly representing the interests of the outs in the nomenclature of Europe. And I fully intend to do that. I come to this, I was to say one other thing, with relationships with obviously Mario Draghi, Mr. Barnier, and others in Europe that I will deploy, but I'll deploy on behalf of the Bank of England and broader British interests.
A very quick question and a very quick reply, if that's possible. And then I'll bring in Andy Love and we'll wind up this part of the session.
Dr. Carney, you've suggested an increase in German wages and private demand and inflation would ease the transition from a balance of payments crisis within the currency area. Bearing in mind the, shall we say, slight reluctance on the part of European politicians to be offered advice by British politicians, do you think it's appropriate, and do you intend to continue to offer this extremely helpful advice to the Germans?
Yeah, I'm not sure it was that welcome coming from a Bank of Canada. Yes, I do, because I do think that is an essential piece of the rebalancing puzzle. So yes.
Very, very helpful answer indeed. Not least that it's brief. Andy Love, and then we're going to take a break.
Welcome, Dr. Carney. I've been struck in the responses you've given to various questions that you seem to be very committed to the flexible inflation targeting, with an emphasis on the flexible. Was it your intention to be absolutely clear about that? And in the debate that we've talked about at the committee this morning that's going on about monetary policy, would you be speaking up on behalf of flexible inflation targeting?
Yes, it was my intention to be clear about that, and hopefully I have been. If there is an ongoing discussion of this, as appropriate, I would contribute, but recognize my current position in Canada, and I think the best, to some extent, the best contributions I can give is the Canadian experience and observations on what the Federal Reserve is doing and how that might be applicable here.
Of course, there was this flexibility around the word flexible, and contrary to what Mr. Mann said earlier, when we've had the current Governor of the Bank of England, he's expressed his view of the flexibility in terms of setting the policy framework to take into account output and employment issues, so that, for example, we haven't had inflation at 2% for some considerable time. That's quite a latitude would you see there being an increase in that latitude that the current governor has undertaken in relation to hitting the target 2 years out?
Yeah. Not necessarily is the short answer. I think there might be a different way of speaking about it, and there could be a different way of speaking about it or formulating what is effectively a very similar policy, by which I mean the current governor is speaking in terms of taking into account output and employment. That is another way of taking into account the timeline over which there is the return. I think well, maybe I'll stop there and give you the follow-up, because.
Well, all I wanted to do was to emphasise that when people have asked why he didn't change bank rate or he didn't change the position in relation to quantitative easing, he would say that whilst their remit is to get the inflation target to 2% in 2 years out, he had to take into account other factors, and they were important, and that gave him the flexibility. Yeah. I just wondered whether that would continue, and perhaps you would seek even greater flexibility, recognising our economic circumstances at the present time.
It's similar motivations for the flexibility. You're absolutely right. I think the MPC, in hindsight, has exercised considerable flexibility. The question is whether there is more flexibility. It is a question of circumstance, and circumstance only once I arrive, whether the economic circumstance is warranted, but whether it would exercise more flexibility transparently ex ante, in advance, an expectation that it would take longer to return as opposed to a longer return.
The Monetary Policy Committee appears to be concerned about the level of inflation at the current time and the fact that we haven't brought it back to 2%, and that seems to be the rationale for not increasing quantitative easing at the present time. What do you see? You've mentioned several times during contributions the exceptional nature of economic circumstances. How exceptional do they need to be before there will be positive action to boost the economy?
Well, again, I'm slightly handcuffed because I haven't seen what the MPC has said. But I'd make the point that in some cases, if there is a deterioration in the output-employment trade-off, in other words, I'll do a hypothetical because I haven't seen what they said, but if the view is that inflation is going to return to target later than originally expected, and there is no reduction in stimulus, that is exercising flexibility as well. If you follow, that shouldn't be underplayed. Just because there's not positive action of additional stimulus doesn't mean there is not considerable stimulus that's being provided. And in the context, if there were a deterioration in the return to target, then that is stimulative. That action is stimulative.
If a question can be quick, I hope that I'll get an answer, of course. Lord Turner, earlier this week, chairman of the FSA, earlier this week made a speech where he suggested injecting money directly into the economy. Now, when pressed on that, he said it was because of the current economic circumstances. We're bumping along the bottom. We've talked generally about escape velocities. He believes that the circumstances are acute enough to suggest that. Now, I'm not suggesting you would go that far, but is there some recognition of the concerns that he's expressing about where our economy is at the present time and what we need to do in monetary policy terms to move it out of that position?
Let me say two things. First, with respect to so-called helicopter money, which was referred to there, I'll just be absolutely clear. I cannot envision a circumstance where I would support that. I cannot envision any circumstance where I would support that as a strategy. And I would say, secondly, that there is considerable policy flexibility that remains within the existing tools of the Bank of England if additional stimulus were required, and we've talked about some of them today. But to your last point, which is that the circumstance of the economy moving sideways, considerable slack, still subject of some debate. The degree of slack, considerable debate, I should say, the degree of slack, but clearly slack in the labor market, in the economy. That circumstance, within the context of price stability over the medium term, that is a circumstance where absolutely, given that there are options that exist for stimulus, the MPC will, I'm sure, continue to evaluate whether it's appropriate to use those. But that's grounded within the overall framework, and I'll pass it back.
Well, we're back to high monetary theology again, where we've been for quite a bit of time this morning so far. I think we should take a break now. You've had quite a testing time so far, but you've certainly demonstrated that you know how to handle committees like this, and you've also passed the 3 simple, awkward question tests put to you early on, one that often tripped up candidates in pre-commencement hearings before Congress. I think you look a fit man, so why don't we just have a 5 or 10 minute break? Let's call it 5 minutes, resume, and then we'll do financial policy.
Okay, thank you.
You want to take me off? Hold on, I'm concentrating. Well, then why don't I start off with Stuart Hayes? Stuart, why don't I just go straight to you now? Okay, on liquidity. Sorry. Order. Thank you very much for being to put up with a marathon session. We don't normally take this long each time the governor comes before us. We're now going to take a look at financial policy and the new responsibilities that the bank has acquired as a result of the legislation, and which will be further amended as a consequence of the banking bill that's currently before Parliament. Stuart Hosey.
Dr. Carney, in January this year, the group of governors and heads of supervision announced significant changes to the Basel III liquidity rules. That gave the banks an additional 4 years and extended or provided for a wider use of assets as part of the liquidity buffers. How much of that was a pragmatic decision in light of prevailing economic conditions? And how much of that should worry us in terms of it being perceived as a watering down of tougher new rules?
Yeah, well, I participated in that meeting, which was chaired by Governor King, as you may know, and wholeheartedly supported the new agreement. And I'll give you a bit of context, which is that the original agreement was we had spent a lot of time on the Basel Capital Agreement, Basel III Capital Agreement. We governors, heads of supervision, had spent a lot less time on the liquidity, the original so-called liquidity coverage ratio, and we'd explicitly signaled that we would be reviewing that LCR over the course of the subsequent year when the original Basel thing was put in place. We made a series of adjustments at that meeting, and they all make sense. And the spirit of that meeting was to get the right ratio, the LCR, liquidity coverage ratio, so that the banks manage their short-term liquidity appropriately, have appropriate liquidity buffers. We wanted to get the right requirement there. And that's why we have a medium-term phase-in. And that phase-in, as you know, it doesn't just start in 4 years, or it starts in a couple of years, and then starts from a 60% ultimately to 100% of the new LCR. So it starts in 2015 and dovetails with the Basel Capital regime. In terms of, but the changes that were made between the two are all, in our opinion, very sensible changes. The definition of what is a liquid asset was broadened to be measured on the basis of liquidity, actual demonstrated and demonstrable liquidity, as opposed to creditworthiness. So originally, effectively, we said the only things that were liquid assets were government bonds. Obviously, you can just look at any of the aspects of the recent experience in peripheral Europe and see that there are a number of government bonds which were anything but liquid, but they would have counted under the old LCR. Whereas equities, listed equities in the main indices, which one might not like the price on a given day, but they're always liquid. You can always buy or sell those securities. So with an appropriate haircut, should be in the denominator, or the numerator of the LCR. They were brought in as one example. We also brought in a broader range of corporate bonds and asset-backed securities. All sensible things measured on true liquidity. So the resources that are available to meet short-term obligations of the banks were expanded. But equally importantly, on the basis of evidence, on the basis of experience during the worst financial crisis that since the Great Depression, the assumptions around drawdowns from bank lines, so whether somebody uses a contingent bank line, they ask for the actual money, which is a call on the bank's short-term liquidity, the assumptions around those and runoff rates on deposits, so whether or not depositors take money, corporate or individual depositors take money out of banks. Again, something that we had great experience with, unfortunately, during the financial crisis. So we can actually see what the drawdowns and the runoff rates were. The original specifications were wildly conservative relative to experience. and they were adjusted back to very conservative relative to experience.
So, the central banks, the governors and the heads of supervision, presumably in discussion or under pressure from the commercial banks, who were very critical of the way the liquidity buffer had been put in place, decided to take what you say are these sensible measures. I suppose the question I have is in two parts. Why was there so little focus on liquidity initially with Basel III and so much of a focus only on capital? And secondly, and this is really the key point, now this is likely to be changed, will it result in more lending from the commercial banks into the real economy while maintaining safety of the system?
Yeah. Two reasons for the relative focus on capital. First, there was a manifest deficiency in capital as a result of the crisis, in the run-up to the crisis and in the aftermath of the crisis. And it was important to address demonstrated shortcomings of the old Basel II regime, but also to ensure that banks started to move to build capital in a phased approach, but to build capital. Liquidity, there was, as you're probably aware, there was never a liquidity standard in the old Basel II or the old Basel I. So liquidity was new. This was a new standard. We started to put it in place. And it needed, because it was new, there needed to be an observation period and to make adjustments as necessary to that liquidity standard. The second reason why there was less focus on liquidity than capital is because in an environment where liquidity was strained in the major economies, and then now this is largely an issue in Europe as opposed to the other major economies, but in an environment where liquidity is strained, this is not a minimum. The liquidity standards are buffers, not minimum. And so the point is, in a strained environment, banks should be able to draw on these buffers, and as necessary, central banks provide backstop liquidity through a variety of facilities. So all of those aspects argued for immediate focus on capital, take your time to get liquidity right, adjust liquidity because it's new as appropriate, and I think it has been appropriately adjusted. And I just underscore, to go back to the lending point, is that the behavior in some markets, those markets that are liquidity strained, was that there was an argument from the banks, to which I don't fully subscribe, quite frankly, but there was an argument from the banks that the presence of the liquidity standard was exacerbating pressure on funding liquidity for those institutions, and that was restricting lending to the real economy. I think in the end, the far more important thing, particularly in the European context, is concerns about adequate capitalization of those institutions, and that's what is being gradually addressed and could be more aggressively
So just one final small question. This issue about using buffers, liquidity buffers or capital buffers, when there's a strain on the bank, do you think that's understood enough, or do you think that even within banks some people think these are de minimis levels rather than contingent funds to be used when the circumstances demand it?
It's the right question. I don't think it is widely enough appreciated either within the institutions or within the broader market that these are buffers that are meant to be drawn upon, and that gets to a question of what's the interaction between these liquidity standards and backstop liquidity of central banks.
On that point, the UK's taken a couple of policy initiatives in order to try and ease the liquidity positions of banks in order to encourage them to lend. Have they done enough to eliminate the stigma attached to going to the discount window?
I think if I can take that in two parts, what has been done to encourage, to outside looking in, what has been most effective policy measures to encourage lending have been the ECTR and funding for lending, and encouraging on both regards, but still early days, and obviously that's potentially an iterative process where learnings would result in further adjustments. I don't know, and that's a decision for the FBC and MPC maybe. With respect, though, to stigma, your direct question on stigma in the discount window, it is extremely difficult to eliminate stigma related to discount window borrowings. And one of the, and I know this is an issue that has been raised in the context of the Winners Review, for example,
and in this committee,
and in this committee, and I think it's an issue that's not yet. My sense would be it's an issue that's not yet solved. My further sense is that part of what was agreed in Basel on these questions are very much related, as you appreciate. Because part of what was agreed in Basel was that there will be work through the Basel Committee on the interaction of central bank facilities and the LCR over the course of this year. And we, the central banks, would have to come to an agreement, let's say this time next year, about the appropriate types of facilities that could interact. And what the thinking is, in broad terms, is that institutions could pre-position collateral with the central bank, have more of a standing liquidity facility, pre-position collateral, and then the pricing would be such that it is more expensive than the market in normal times, but could be drawn against in stress times, and that this would count against, if favorably, count for some of the liquidity requirements that institutions would have to hold, and by doing that. Can create a dynamic which provides a more continuous access to central bank liquidity that addresses, maybe to go to your point, that could address the stigma issue. But this is a very difficult issue. That may be one part of the answer, but my view would be it's ongoing work for all central banks.
Tough nut to crack, not yet cracked.
Yeah.
Definitely high on your agenda. Is that what I'm hearing?
The high on the agenda, yes, because of the interaction, yes. Yeah.
Okay, John Mann.
The high street small businesses and consumers in this country have got higher interest rates for borrowing, but lower interest rates for saving than, for example, Germany, France, Ireland, Greece. Is this an issue for you, and if not, why not? And if it is, what are you going to do about it?
Greece? I'm not sure about Greece in terms of superior borrowing and saving dynamics, but certainly Germany is the case. And yeah, it's absolutely an issue. It's the spreads to which you're referring are a cause of concern. It's an inefficiency at the core of the economy. It is a break, or at a minimum, it restrains the transmission of monetary policy, which is intending to be very accommodative to support the recovery. There's a sense of unfairness, I'm sure, which you hear from your constituents in terms of ability to borrow as a smaller business being more constrained than the ability of large businesses that can go to a very wide open at present capital market and borrow on very favorable terms. I think there are a couple of challenges that explain it, both of which are being addressed, or the intent of current policy of the Bank of England is to address them. First is to ensure that the core of the British financial system, the banks, the core banks at the heart of the British financial system, are transparently and adequately capitalized. There have been some questions around the adequacy of that capitalization. The FPC has raised the issue. It is in the interest of everyone that there is a speedy resolution or conclusion to that review, and that it's transparent and clear that the capitalization is adequate of those institutions. First point. The second is what the chairman just touched on, which is funding for lending, and which has a dual benefit. One is direct benefit, which is to, if drawn upon, as you know, lowering the funding costs for those institutions, which should be, in a competitive environment, passed on. It's not fully passed on as yet, as you know. But the other benefit of funding for lending is actually its presence has actually encouraged a reduction, in my opinion, and I think in the opinion of the bank, has encouraged a reduction in funding spreads in the market for banks, so that we're getting the market multiplier from there.
But I mean, that's, if I may say respectfully, a partial answer, because it doesn't answer the difference, and it is the case with those countries I quoted. It's their own statistics as verified at an international level. So we're in a worse position on both borrowing and on saving. Another scenario would be that it's because we don't have any real competition, and that's led to a culture and a business model in our banks that's anti-competitive, anti-consumer, anti-small business. Do you think that the two state-owned or primarily state-owned banks would be better if they're broken up? And if so, do you intend to press for that?
With respect to the direct question, I don't know is the honest answer. I haven't looked at the particular circumstances of either of those two institutions and the relative merits, economies of scale, scope that would be necessary. The valuation potentially could be achieved in the ultimate interest of the taxpayer. The first point. Second point is that without question, competition and measures to improve competition in financial services, including in this country, are extremely important. There are some measures I'm aware that this committee has focused on that have been taken up this week by the Chancellor, and that would appear to be welcome. There's other measures that can, I'm sure, be taken. From the Bank of England's perspective, from our perspective, we have to ensure that the facilities that we provide, whether it's in liquidity, funding for lending, as examples, that they are available to as wide a range of institutions as possible, so that we are not skewing the competitive landscape in any way, shape, or form. And with 39, I believe, institutions signed up for funding for lending, I think that is the case there. There's also consideration that is given to the structure of the financial system and, if you will, ultimately, not purely for competitive reasons, but it has this impact in some of the deliberations that the MPC has made on the lowest, how low the bank rate can go because of the impact on building societies and net interest margins in building society, which therefore, by extension, would have a competitive impact. But I guess I would make the point, respecting that the core mandates of the institution. So we do these things to ensure that we are not hindering, and in doing so, with a level playing field, promoting competition in that regard. The promotion of competition in financial services is more primary responsibility, as you know, for the FCA than it is for the Bank of England, and we have to ensure that we discharge against our demonstrated, our given remits.
One of my colleagues, I think we'll come back to that in a minute, but I'd just like to move on to, use my time onto a separate area. If we take the 50 largest banks in the world, then every single one of them has been embroiled in the last year or two in criminal fraud, without exception. So the consumers and the general public are rather cynical about banking, and I'm quite sure what their questions to you would be, which is, what are you going to do about all these greedy bankers? But I wanted to angle in on a slightly different angle, which is the US regulators have been far quicker, far more brutal, they've fined more, they've been happier to imprison more than we have in this country. And we've seen that even this week with LIBOR, in terms of the fines levied. What direction do you intend to take banking regulation in this country? More towards that American relative robustness, or more towards the rather softer, gentler, and significantly slower approach that we've had traditionally and in recent years in this country?
Well, the first point I'd make is that the behavior that's been exhibited and confirmed this week, particularly around, for example, around LIBOR, is reprehensible and should be prosecuted to the full extent of the law in the various jurisdictions that are affected. That's clear. I think we'd all agree on that. The responsibility to do that does not rest with the Bank of England, either in its current guise or its future guise. Issues of conduct, apart from criminal conduct, but issues of conduct, as you know, will reside with the FCA. That said, in my experience in prudential supervision as part of the interagency committee in Canada, which oversees all the banks and insurers, the patterns of behavior far less severe than what has been revealed with these institutions, but patterns of behavior and an absence of control, proper control environments, weaknesses in culture are material for the prudential supervision of those institutions. There are issues that have consequences in terms of how much capital those institutions, apart from all what should be done on the conduct and the criminal side, the justice side. They have consequences in terms of what types of activities those institutions should be engaged in, the capital they need to carry, consequences for remuneration. Other aspects, my point is of prudential.
With respect, it is brief, but I mean,
a quick further reply.
And the Canadian banks are embroiled with criminality as well. But you're copping out with your answer. Are you not going to take, with this incredible level of power that this job now has as you come into it, proper responsibility for ensuring that this industry is treated as every other industry would be when there is such a level of criminality in all the leading players?
Two things. As Governor of the Bank of Canada, I take issue with your description of the Canadian banks. That is not to say that there are not the word embroiled. We will have to disagree on. The second thing, and I would know if given my role and given the oversight that we have. The second thing is that we have. It is not a cop-out to ensure that there are clear lines of responsibility for conduct in the financial services industry, which runs through the FCA. My point, and I believe the policy consistent with the approach of the PRA, is that this type of behavior, even at a much less serious level, and this is at a very serious level, the issues that have been revealed in recent weeks and months, but even at a much less serious level, has consequences. It has consequences for prudential supervision. It has consequences for capital. It has consequences for activity. It has consequences for compensation. It has consequences for whether individuals are judged to be fit and proper. And that is how one conducts effective prudential supervision and taking into account these type of issues. In parallel, if I may, there are conduct consequences through the FCA, and if it rises to a seriousness, obviously criminal prosecution.
Question or an aspect of it another way, by pointing out that the PRA, if it has an enforcement issue, has to trot along to the FCA to get the action undertaken.
Yes.
Do you think that's a sensible arrangement? Maybe that's too tough a question before you even come in, but do you think that at first blush there is a curiosity about having the prudential supervisor have to obtain the cooperation of the conduct supervisor in order to obtain an enforcement action? These two things were in the same body.
Yeah, I understand. It entirely depends. I don't think I'm qualified until I see it in action.
You take a buy on that one,
if I may. Yes.
For the time being, but it's certainly an issue that a number of us on the Banking Commission, in another context, have been looking at. Andrew Liz.
Thank you. I think the Chairman's desperate for his lunch because he's not letting us question very much, so I'm going to lead my witness slightly here. Okay. You've gone on the record as saying that you don't think concentration necessarily led to the financial crisis, but now coming into the UK, you've clearly accept that both the UK and Canada have concentrated banking systems. How important is new competition, specifically getting new challenger banks in? How far are you prepared to go with the PRA in ensuring that they do offer new banking licences to new challenger banks? And finally, a very specific question. Have you looked at the merits of bank account number portability as a means to achieve both resolution in the event of a failure, but also as a means to allow new challenger banks direct access to the payments infrastructure that would give them the competitive level playing field that they're looking for?
I think at the heart of all excellent questions, at the heart of the PRA approach can be pro-competitive, by which I mean that one of the things that I think Andrew Bailey and the PRA have stressed from the start is that the intention is not to operate a zero failure regime, but the intention is to ensure that failures can be dealt with effectively and efficiently without wider systemic consequences. And that ease of exit promotes ease of entry, because the knowledge that one doesn't have to belt, braces, etc., a new entrant because of the fear of what the consequences could be if that entrant fails, should adjust the entry, the barriers to entry, or the level of the entry requirements, which should promote entry and competition. And I agree that it's important. It is not as you know, it is not the principal objective of the PRA. It's not the principal objective of the bank. But by designing a system in this way, and truly designing a system in this way, and all recognizing that the failure of a bank is not a failure of the system, it's a failure of the bank and the individuals associated with that. That is incredibly important. On the issue of bank account portability, I would say that I followed the debate here and intrigued by it, and support. I support the direction, but I would defer really to you and others who are Andy Haldane and others who are far more expert in the issue than I.
But you're not closed-minded to it.
I'm given what I know, I'm very open-minded to it, but as I say, I'm not the expert on it.
Will you also keep an open mind on a related question with respect to PRA responsibilities, that they acquire more than a mere duty to have regard to competition, but also a duty subject to the overriding task of maintaining financial stability to promote competition?
I'm afraid my mind's a little more closed on that one than open, in that my reading of the have regard to is, which may be wrong, but my reading of the have regard to responsibility is it strikes the right balance, given the principal responsibility of the organization, I believe quite strongly in the value of competition, and I do not view that competition is inconsistent with vibrant competition is inconsistent with financial stability. I do think that it's important that the various policy arms of the bank, to the maximum extent possible, have very clear remits and principal responsibilities. So I'd be a little hesitant on further reinforcing that.
I'm fine with hesitancy. It's the closed mind I was a bit jumpy about.
I said more closed.
Yes, yeah. Okay, a bit more closed. Because we've had extensive experience of have regards, and they've turned out to be disregards. So I think something needs to be done. Andy Love.
Can I turn to recovery and resolution plans? You were quoted in the press last week as saying regulators around the world are still some way from solving the problem of how to deal with the failure of a giant global bank. Should we be worried?
I think you should retain your focus on the issue, yes, as we have to. The intention, what will happen at the level of the Financial Stability Board is that for all the 28 global systemically important banks, the recovery resolution plans are due to be submitted or completed by this summer. There is going to be a review of each one by a college chaired effectively by me as chair of the Financial Stability Board, and there's going to be a broader peer review of the effectiveness of the resolution approaches in the relevant jurisdictions. I would say that I would expect that we would find potentially a wide variance in the effectiveness of these plans, partly because of a variance in the legislative authorities that officials have, partly because of variance in the preparation of different institutions. I think it's the jurisdictions that are the most advanced in my reading are the United States and the United Kingdom, particularly because there has been work led by Paul Tucker and Dare Turner on cross-border resolution, cross-border agreements. There's been substantial advancement there, but there is more work to be done, as they would attest. And I think this is something that the right way to address it, and I'm speaking in my role as at the Financial Stability Board, but the right way to address it is with very clear transparency about it, so that once these plans are in place, they're assessed, the deficiencies are brought to light publicly. They're also brought to the highest level at the G20 to take an assessment of what else needs to be done in order to ensure that the objective of ending too big to fail for individual institutions is achieved, but more needs to be done.
Some banks have missed the end of 2012 deadline. I think you have now moved
some banks,
it.
They have, yes.
You've now moved it on developing the living wills.
That's correct.
Should we be concerned about the deadline? Will they reach the new deadline? Is there a significant problem underlying these delays?
Well, if they miss the new deadline, it will be brought to the attention of their head of government, head of state at the G20 summit in St. Petersburg as be one of the elements of my report to them. So it's inadvisable to miss the deadline.
Which banks are we talking about here amongst the UK domiciled?
This is not an issue in the UK.
It's not an issue for the UK. Well, that's one less problem. Let me ask you as a final question, because we are strapped for time. Let me ask you a more general question. We're putting a lot of faith in resolution and recovery regimes. Can we achieve what we've set out to do in terms of being able to resolve a highly complex, internationally based bank in the way that you're discussing at the present time?
Well, I think the imperative is to achieve it, but equally the responsibility of the public sector is to, if it is not achieved, the responsibility of the public sector is twofold. One, to not overrepresent what has been achieved, so to be transparent about how much progress we've made, where we're coming short, and if it ultimately is not achievable, I believe it's achievable, to be absolutely clear, but if events prove otherwise, to be absolutely clear about that, because then other decisions would need to be taken in a broader, might be taken, I should say, in a broader political sense.
But at the present time, and you're in the best position to know, you're still confident that we can achieve this?
I am confident that we are making substantial progress and that it remains achievable. But there's significant work still to be done, even in the most advanced jurisdictions, yes.
So,
yeah, it's still achievable.
What are the implications of that for a committee of our nature? I mean, where should we be looking at to ensure that the UK authorities are playing a positive role in this? You mentioned a number of the Paul Tucker and others who are involved in this. Is there other things that we need to do as a UK authority to help ensure that this progresses?
Well, I think the issue that will, I think it's the responsibility of the, I'll put it on the bank, because ultimately this comes back into the bank and through the resolution responsibilities to report what else needs to be done. And what else needs to be done and what is outside the power of the bank to ensure. So, for example, one aspect that in a so-called, to get slightly technical, in a single point of entry resolution is to ensure that there is a proper corporate structure, and that high enough up the corporate structure, ideally at a holding company, that there's sufficient bail-inable debt at that holding company, so we need to ensure that's achievable. I guess what I would say specifically from a UK context, what's incredibly relevant here is the EU resolution directive that is working its way through, which from an FSB perspective is quite encouraging as an approach. There was lots to be recommended in the directive as it currently stands. Obviously, that's relevant from setting the framework for the UK regime. So the stock take comes as that comes through. The stock take is with that, and then also informed by particularly the discussions with the U.S. authorities that are currently progressing.
Thank you. David Ruff.
Dr. Carney, the FPC in relation to higher capital requirements that are in prospect have said that the extra capital required should be raised in ways that do not hinder lending to the real economy. But I mean, isn't it the case that banks are not going to be doing it by going out into the markets and raising capital that way, but rather they're shrinking their balance sheets with commensurate negative impact on SME lending to the small businesses, the lifeblood of many of our constituencies, indeed the British economy? Isn't that what's happening?
Well, I think the spirit of the FPC recommendation is exactly that shouldn't be what happens, and that actually the adjustment in the capital ratios of the institutions is made through capital raising. There are a variety of forms of capital raising. It can be done through higher retained earnings, higher retained earnings, which can be got through a variety of mechanisms, asset dispositions, restructuring other aspects, or shrinking of ex-UK balance sheets as opposed to British balance sheets. So that's the spirit. So I'll leave it at that.
Could you just say a bit more about what the alternatives are to shrinking the balance sheet? Because that anecdotally, that's what most people perceive, because banks aren't going out into the capital markets to raise money that way in a significant way, are they?
No, they're not. And
so what are the alternatives to that if we're not to have shrinking balance sheets with a commensurate hit to the SME lending sector?
Well, the alternatives are to shrink other aspects of the balance sheet outside of the country. Some alternatives could be accretive dispositions of certain lines of businesses, or release capital from certain lines of businesses.
Asset disposals.
Which could be redeployed. And I'm not, to be absolutely clear, I'm talking in the highest of generalities, not about specific institutions. I don't want to be misinterpreted as giving direction to specific institutions.
But do you think you'd have any powers to ensure that these alternatives you've listed are utilised rather than the shrinking of the balance sheet?
I didn't catch the first part of the question.
Do you think you will have the power as Governor of the Bank of England to ensure that banks are encouraged not to shrink their balance sheet and to deploy the techniques you've listed for meeting their higher capital requirements?
I think it's the responsibility of the bank to ensure that the institutions are adequately capitalized. It is, from the context of monetary policy and achieving the inflation target in an environment of sustainable growth, it is the responsibility to ensure that appropriate instruments are used that flow through the banking system to support output, investment, growth, and ultimately consistent with price stability in the economy. I hesitate to say on a high level that it's the responsibility of the bank to direct the activities of private financial institutions to specific sectors or regions. There are other policy levers that in government that can be used in order to do that. But I think, and I'm not party to, obviously I didn't participate in the FBC deliberations, but I think the direction is informed not just by the requirements of the British economy, but also by an informed view of the position of the institutions themselves and what their options could be in order to enhance their capital positions.
But it might be the case that you have to go beyond exhortation. But I just want to ask one final question, which relates to the true state of banks' balance sheets and how they account for what's on their books. Andy Haldane, among others, has commented on accounting and how it can be opaque, and lack transparency. I wonder if you have had any thoughts, not just in relation to British banks, but in the course of your international work, about a new accounting standard, a separate accounting standard for banks, so that they are more transparent and so that it is clearer what the state of their balance sheets truly are.
The answer is yes, in terms of thinking about how to enhance the transparency of bank balance sheets and improve their utility for all stakeholders, from regulators to investors to their clients. What we have done internationally is we encouraged what became a private sector group of banks, but more importantly, investors in banks, and including both on the debt side and on the equity side, to do an analysis of bank accounts and make a series of recommendations to enhance the transparency and disclosure of the institutions in a way that's actually useful for the users of those accounts. And so there's a report that came out in early November. It's called the Enhanced Disclosure Task Force. That report, I highly recommend it. We have welcomed it at the FSB. In Canada, it is the intention of the supervisor to encourage our banks to adopt the report in its entirety. And if I can just give one or two examples of what it does to help accomplish what I think you and I and everybody wants, from a set of 600 pages of bank disclosure that tells you nothing effectively, but disclosure which maps from what they have to disclose for accounting reasons. The accounting balance sheet maps from that balance sheet to how they manage risk, how the bank manages risk. So what are a mapping from the specific assets that are disclosed on the balance sheet and in the notes to their measures, that bank's measures of risk around those assets and how they manage them, where their tolerances are, and very importantly, how they map, pardon me, from the assets, the assets to how they make money, their profit and loss position, and where the concentration of earnings are in the actual institution. So that is one initiative that we would like to see adopted in Canada. I would recommend it here as well. And I would note that some of the largest institutions in the UK were very much behind this initiative. The other things we're looking at, pardon me, the other things we're looking at internationally are encouraging the major standard setters to get a converged, first a standard, but the same standard on expected loss provisioning. So when banks make loans, that they do take provisions for the expected loss and that adjusts over time. And the art here is to ensure that it's a faithful representation of expected loss. It's not a built-in hidden reserve that then is drawn upon over time. And the IFRS and the American FASB are working on that. And the last thing that we're looking at, or amongst other things, but the last one I'll mention, is something that is an initiative of the Bank of England and the FSA, which is an approach that looks at prudent valuation of so-called level 3 assets. So these are assets that for which there's no market and are valued on the basis of models, internal models. And the idea, which is more complicated than this, but to simplify, is instead of taking the midpoint of a range of potential valuation outcomes that the model will give you, the bank should value at the low point or the tail of the range. And the question is the utility of that relative to other measures that are in place. So there are a number of initiatives that, if fully put into place, and I would start with the Enhanced Disclosure Task Force report, fully implementing that at the institutions. But there's a number of initiatives that can improve, I think, quite substantially the utility of bank accounts, and therefore improve, not just make our jobs easier on the regulatory side, but improve the discipline very much in the marketplace, so that these are not just black box institutions that spit out earnings until they don't.
And as the new governor, you'll be able to impose this in the UK, won't you? As you've talked about the international dimension.
Yeah. Working with my colleagues on the PRA board, because again, it's not for me as the individual to impose, but working with my colleagues on the PRA board, I would encourage the institutions we cover, the large institutions that we cover, to adopt at a minimum the Enhanced Disclosure Task Force. But that would be a decision that would, I think, quite naturally fall to the board if it hasn't been. And it may be taken prior to my arrival at the bank, I guess the other thing I would say. But the broad initiative is absolutely right. The thrust of what you're asking about is right.
So you're receptive to ideas for improvements to accounting on the prudential grounds?
Yes, I am, although what I would say is that, I suppose could be convinced otherwise over time, but I do start from a position where I prefer to not have two sets of accounts, a regulatory set of accounts.
Well, we've already got a couple, haven't we? Because we've already got a set for revenue purposes.
Well, we have, yes, but I mean, we have a P&L, balance sheet and cash flow, but there is a default sometimes of the accounting profession which says, well, if you regulators really want certain things like expected loss, why don't you just calculate it yourself? Or if you want to adjust capital in a certain way, why don't you just do it yourself? And that is, I think it is very much best avoided, and the focus should be on ensuring that what is represented for accounting purposes and public reporting purposes is also what is used as the first cut for regulatory purposes.
Interestingly enough, the Banking Commission, to which I referred a moment ago, took evidence yesterday from HSBC, who accepted the need for this, even if it meant 3 sets of accounts. I just put that on the table. Pat McFadden.
Yeah, I'll just be clear. I disagree with that, but yeah.
I'd like to ask you about leverage ratios. We know that in the run-up to the crisis, over-leveraged banks were a problem. You've been involved in the Basel process, which has recommended an overall leverage ratio of 33 to 1. In the UK, the Vickers Commission recommended that banks hold at least 4% of capital in relation to their overall balance sheet, so a lower leverage ratio. Your soon-to-be predecessor, Governor King, has said he thinks it should be at least 4%. What's your view?
Well, the specific, if just clarify what we're talking about, the specific recommendation, as I understand from the Vickers Commission, and I've discussed this with Sir John, is that for the ring-fence bank, there's, as you know, a higher primary loss-absorbing capacity, various forms of capital. And the logic is that given that has been raised in order for the leverage ratio to be an effective backstop, it should similarly be raised. Yep. And I agree with that logic. I think it makes sense if one is adjusting the minimum there. Now, I understand that is not currently in the bill. That recommendation of the Banking Commission has not been accepted. I stand to be corrected on that, but that's at least my understanding. In a world where that becomes law, obviously the bank has to respond to that reality and respect that reality if that's a discrete decision. It puts a bigger emphasis or importance on supervision of those assets which have a relatively low risk weight under the risk weighting scheme, because as you know, what the leverage ratio really protects the system from is those assets that we think are low risk, but in fact aren't. That was very much at the heart of the crisis. So the regulatory response, if that's the decision, and there's lots of different factors. I recognize that leverage in building societies and other factors would be a consideration in coming up with the final determination. But to to address the risk that's created there, I would think higher regulatory, supervisory, scrutiny of so-called, what are low-risk assets under the risk-weighting approach. But obviously we await final.
Do Canadian banks have to operate with such a ratio at the moment?
Canadian banks have a leverage ratio, and if you ask me if I could only pick one reason why Canadian banks fared as well as they did, there were multiple reasons, but if I had to pick one, it's because we had a leverage ratio that saved them from doing.
What is
the leverage ratio in Canada? It's calculated differently, but it's a 20-to-1 leverage ratio. That in effect means that they operate at about 16 or 17 times, because always when you set these minimum, people operate inside them so they don't inadvertently bump up against them.
But to be clear, we're having an argument in this country about 25 or 33.
Yeah.
In Canada, your banks are operating at 20 to 1.
Yeah, but to be clear, our banks, the denominator of that 20 to 1 is a broader definition of capital than the strict common equity tier 1 definition for the. So it's a bit of an apples and oranges comparison.
You mentioned the bail-in and the Recovery and Resolution Directive. I won't try and draw you into the country's European debate, but of course that directive will only be helpful to us if we remain members of the European Union. It won't be much good if we're not. More generally though, how critical is a bail-in regime to ensure that the taxpayer is not on the hook in the event of future?
I think it's critical. I don't think it's decisive. In other words, I don't think it assures that the taxpayer is not on the hook. But it's essential to have a credible bail-in regime, and I think further it is highly desirable to have identifiable tranches of bail-inable debt. It doesn't have to be a class of debt, but identifiable tranches of bail-inable debt in sufficient size to address historic experience of banking shocks in order to provide market discipline that will make the full power of the instrument be felt.
You're confident this will happen then?
I think we're moving in the right direction in a variety of jurisdictions, including Canada. But the job has to be finished, but significant progress is being made. So at this stage, I'm confident, and I think the commitment to Mr. Love's question is if we lose that confidence or it starts to be shaken, is to come back and report it.
Can I ask you one final thing? You've been taking questions now for 3.5 hours on a whole range of policy issues. Thinking about those questions and the publicity that has surrounded your appointment, are you concerned that expectations of what you might be able to do may be set too high?
I can only assume those who are increasing the expectations are doing it so that they can have the pleasure of knocking them down almost immediately, and that's probably been accomplished by now, I would think, on the basis of this testimony. Look, I think it's a fair question. I mean, the point is, and I made this point in my written submission, which is that the exit, part of the measure of success is the exit is less news than the entrance, and that would be accomplished hopefully through successful execution of our responsibilities, but also a bigger recognition that this isn't a super governor position, or that this is an institution. It's a series of policy committees that do their work and make decisions and do their best to work together, and it's a much broader, deeper institution that is discharging these responsibilities as opposed to an individual. And as that becomes more apparent, then the individual becomes much less important.
I apologise now for we've been running for 3.5 hours. I've got one more colleague who wants to come in, and then I think we really will wind up. Just on one point that Pat McFadden was touching on there, well, more than touching on the leverage ratio. Do you agree that the leverage ratio, it is absolutely essential you have a robust leverage ratio, given that the risk ratings are more or less manufactured by the banks using their own models, and that they're scarcely worth the paper they're written on?
I disagree with the first start. I agree that it's essential to have a leverage ratio as a backstop to a risk-based capital regime.
And how do you feel about these bank models?
There is a variety, there is a range of quality of those models, and it's the responsibility of the supervisors, both within a country and across jurisdictions, to up the overall level. That's one of the reasons why the Basel Committee has just published a report last week, which, on a standardized model.
Plenty of scope on the upside.
There is plenty of scope on the upside, but yes, there's plenty of scope on the upside, but there's plenty of value in having this system as the first test for capital adequacy.
Treasury Committee.
We've already touched on LIBOR, so I'll just ask some brief questions. When you first heard about the LIBOR scandal, were you surprised?
There's two aspects of the LIBOR scandal. The dysfunction of the LIBOR market was something that, as a central bank, one could not help but be aware, and we discussed in 2008-9, and it brought a policy response. Associated with that was a suspicion that was being dealt with by conduct authorities that banks were lowballing LIBOR for purposes of self-protection. The term escapes me, but basically to not let on that they were having the difficulties that they were having in borrowing and not be outliers in terms of reported borrowing rates, which is definitely a conduct issue, but being dealt with by the conduct authorities. I have to say that the second stage, and the conduct authorities investigated, discovered it, and discovered that this was much more widespread than we would have thought. So that was a surprise, but on a different order of magnitude was the surprise, or the shock, I think is the right way to put it, of the manipulation, the active manipulation and sustained manipulation of LIBOR for the purposes of direct profit of the institutions and direct profit in the sense of compensation of the individuals. I mean, that was not something that I would have expected, and something we found shocking, and the scale of it is disturbing.
Just the last question. The British Banking Association, the BBA and the FSA, within their remit is for them to monitor LIBOR. Do you think they failed in that task?
Historically?
Yeah.
Clearly. Clearly.
Thanks.
Perhaps you could give a brisk, very short answers to these questions as well, Dr. Carney. Do you support the proposals that have been put forward for a reserve power in the hands of the regulator to bolster the ring fence? Have you come across these proposals?
Yes, in the sense of on a
to separate.
On an institution by institution basis. Yes, I do.
Good. Do you think that could you give your view on whether or not we should, in addition to implementing the ring fence in the UK, at the start, implement a Volcker rule type separation of proprietary trading, taking that completely outside the ring fenced or non-ring fenced bank?
Yeah, no, I don't think you should overlay a Volcker rule on top of the Vickers recommendations. I think the ring fence model is a superior model to the Volcker rule, and I won't make this a long answer, but I would be very concerned. It is extremely difficult to draw the line between market making and proprietary trading. I think the first cut of the U.S. authorities at that, to which I wrote a very long letter about in my current capacity, shows how difficult that is. And it would unnecessarily, amongst many other things, unnecessarily divert the supervisor's attention from, amongst other things, not just prudential responsibilities, but fulfilling that responsibility on ensuring that the ring fence is respected.
Dr. Carney, thank you very much for giving evidence today. You've been extremely lucid and so interesting that you've kept your audience we're very, very grateful.
Have you kept your rock star image?
It's gone. It's gone. It's gone.
Which was probably your intention to start
Yeah.
with. We've ranged very widely, but of course a number of subjects, even though we ranged widely, have still not been covered. But I suspect that there may be further opportunities. But for now, thank you very much indeed.
Thank you very much.
Order.
Thank you.
We will now go into private session just for a few minutes. I hope.